Are we live?
Are our mics on?
I don't even know. Are we live?
Let's get the right branding on there. There we go. Now it's Benzinga live.
We are live?
We're live, baby. And it's Benzinga, which makes this
Hot mic?
Benzinga live. Always
Oh.
assume the hot mic.
Always
Spencer.
assume.
Always assume the hot mic.
The hot mic.
Yeah.
Man, we got a lot to talk about here.
Yeah,
today.
we do. Happy Monday, everyone. I don't know. I mean, everyone talking about, before the markets open, everyone was talking about the Chris Rock, Will Smith thing.
That was pretty epic.
I mean, we can talk about that today, I guess.
Yeah.
See if there's any stock implications, any if that's a bullish or bearish sign for the market heading
Yes.
forward. We will discuss that.
We got to talk about AMC. Have you seen AMC today?
No, I have not.
Oh, boy. Are you in for a treat?
I'm going to look right now.
AMC.
Oh, wow. I had no clue if that meant we were up, down, sideways,
Yeah.
left, right, up 30%.
Yeah.
Looks like we just had new highs of the day about 5 minutes ago. So, wow, AMC up 30%.
We have a clear catalyst. We can talk about that in a second here, but pretty epic stuff happening in AMC land. We got to talk about Tesla as well.
Man, I hate saying like well, actually, because the one day after it ran up last week, it was down the next day, right? AMC was. I remember thinking, like, is it time to buy just some like crazy
out of the money
calls? Yeah, right now in case, like, just a couple, $100, $200 on some crazy out of the money calls, and I didn't do it. But I think I thought about doing it, and the next day I saw AMC was down, and I was like, oh, good thing I didn't do that. And now it's up 30%.
All right, we'll talk about AMC. We'll talk about the mining company that's going with it now. We'll talk Tesla. We'll talk Apple. What else do you guys want to talk about today? We're gonna have guests. You probably want to know who's on today's show, right? We're gonna have our first guest is gonna be on in 25 minutes or so. Tom Siomades. I think I got that right. Siomades. We're gonna ask him. He's a CIO of AE Wealth Management, and he has thoughts on inflation and the Fed. We're gonna have Matt Hammond on at 12:15, talk IPOs. We're gonna have Jake Wujastyk on at 1 o'clock, and I think that's it for the day, right?
Yeah, that's our agenda for the day. Like I said, we do have a lot to discuss. We can talk about AMC. We'll talk about Tesla. We'll talk about Will Smith, Chris Rock. We'll talk about maybe some sports news from over the weekend.
Big news weekend. A lot of news.
Yeah,
a lot of things going on here.
Yeah. We love the when the flow is heavy with news.
Well,
the
news flow is heavy, but like the market news flow is not. There's not a lot of market news.
Yeah, I think there's just still so much uncertainty out there right now that people that maybe like when we typically would get some predictions from thought leaders or analysts or whatever, that maybe more of them are standing on the sideline right now, just kind of seeing what unfolds. Although we did get Carl Icahn on CNBC the other day, and he was calling for like a full-on recession. I thought it was I was like, all right, buddy.
All right, guys, you know what to do. Smash that like. Here we go.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujastyk from TrendSpider. We have a
breaking news.
All right, so we should probably start with AMC here. Let's just bring up the AM. Whoa! What's up with that branding?
Oh, it's the right. Here we go. Bam.
Wow. Wait, let's get that off.
You want this one? This one?
Yeah, let's go with this one.
All right.
Go with that one. That was bizarre. Hey, look, it's the Raz Report with Spencer and Aaron. Okay, AMC. Back to the chart. Doing a bit of a moon today, a little bit. Up 28%.
A little bit.
Yeah, a nice little moon. We do have a clear catalyst. CEO. He gave 2 interviews, Adam Aaron. He gave one interview, apparently, from his limo on the way to the Oscars to Reuters, in which he said that there's going to be more acquisitions of shitty companies. He didn't say the last part, but I'm adding the last part.
Your words, not mine.
My words, not his. And then he gave another interview this morning to CNBC where he basically said the same thing. So, Aaron, I went down a bit of a rabbit hole on Friday night.
Okay. We like rabbit holes on this show.
And
Wait, what happened to the background now?
What?
Who's playing tricks on us?
What the hell happened to Rebecca? I don't know.
There we go.
Something's going on. I'm gonna summarize my rabbit hole in one screen. If you go to benzinga.com, on the right, you go to where it says tools. You go to insider trades.
Ooh, you got into an insider trades rabbit hole.
And you search for AMC. This is what you find. Oh, sorry. There we go.
Where's the green? Where's green? Green indicates buy.
Where are the buys? This is in chronological order.
Okay.
Where are the insider buys? Where are the insider buys? I gotta go to page 2. Let's go to page 2. Again, starting from the most recent. Here we have someone exercise some calls on what is that? April of. Well, no, the actual trade date. The trade dates were March and February.
Okay.
We had some buys in 2017.
Yeah, so you have to go back to before COVID.
4.5 years ago, we had some buys.
I
am not saying that AMC has to go back down. If you didn't learn your lesson the first time, then shame on you. The lesson with AMC and GameStop is just because the price does not make sense on paper does not mean the stock can't rip in your face. I will never again in my life, well, not that I did this, but I would never short AMC in this environment. I would never do it, right? Because you could get your face ripped off. It happened once before. It can happen again. That being said, take note of what the insiders are doing. They're telling you how they feel. Okay? They have not bought stock in their own company in 4.5 years. No one. They're selling to you, to us, to everyone. They're selling to the market. It's their right to do that. I still don't understand what the hell is going on with this miner. They basically bought a defunct mining company with no active operations. It basically was a bailout, is what it was. It was a bailout of this company. It makes no sense. It doesn't have to make sense. HYMC is up 48% today, 49% today. Long term, I think these are both going down. I think HYMC long term is probably 0.
Yeah, wait, I was going to ask. Jay Rice asked the same question I was going to ask. You said you never short AMC, but have you ever shorted any stock?
I should rephrase the question. Have they ever shorted any stock outright? No. I would never bet against it. I would never buy puts. I would never sell calls. I would never do anything.
But would you ever for any stock, period?
Yeah.
Okay.
I would.
You would?
Not an AMC. I guess I would do it. I guess I theoretically could do it in a way that where my risk is controlled.
Well, that's what I think too for AMC. Like if you're on the sideline right now and you're not in it, whether you traded it last year when an AMC and GameStop went crazy, I don't know. Like I am not going out here trying to play AMC, or trying to buy it right here. And if I were going to try to play it on the long side, what I would do is what I was saying was considering doing, what I should have done in retrospect, which is buy some just like out of the money. Let me look at them right now. So if I was looking at the call options that expire 3rd week of April, yeah, say I wanted to buy some $35 strike price. So AMC would need to run another 45%. It cost me $200 to get that contract. And if it runs, great. Like that $200 could turn into $1,000 or $2,000 or $3,000. And if it doesn't, I'm out $200. I know that risk. It's essentially a gamble that AMC will run between now and April 14th. That to me, and options 100% are riskier, more, whatever. But to me, that's a better way to play it than going out and throwing $2,000 of my own money into the common stock, hoping to get, some return out of that. I would not want to put any substantial amount of savings in AMC at $25.
Yeah. No. I'm trying to think of another. Like, what would be an example, everyone, of like another? I guess I could look at Cinemark. What would be another company roughly equivalent to AMC in the fact that it's in a legacy business? I think it's just mind blowing when you think about the fact that there was not a single insider buy in the last 4.5 years. What would be like an example of another? I guess Cinemark. You could look at like any like mall based retailer, right? Like how's Bed Bath and Beyond doing? They have a lot of insider buys, and of course GameStop. GameStop just had a notable buy last week, right? Ryan Cohen. So GameStop has buys. The insiders are buying their stock. They're putting their money where their mouth is. AMC is so the opposite. It is so the opposite. So anyway, do I think AMC is going back down today? Probably not. But eventually, yeah. Sorry. I don't know if that makes me hate it or I don't know. But that's where I'm at. Blockbuster is a good example. If I could look up the insider transactions in Blockbuster, I totally would. Hertz. Oh my gosh, Hertz. Thanks for bringing that up. Who dropped Hertz in there? Quantum. Let's look at Hertz real fast because here, first let's go to the chart, bring up Hertz. Is it HTZ still? Yeah. New bearish indicator. You ready?
Yep.
Spending a lot of money on TV commercials featuring expensive celebrities.
Who was in the Hertz commercials?
Tom Brady, man.
Oh, that's right.
Have you seen those?
Tom Brady's been in so many. He's been in Subway commercials.
All week, I've seen nothing but Tom Brady and Hertz. Tom Brady.
Do you know what else kind of on the same note I was thinking about? So,
but I want to look at the Hertz insider transactions real fast. Let
me pull up this tweet real quick.
Look, even Hertz has insider buys more recently. Again, this is on Benzinga.com. You go to the tools page on the top right. Find this tool. Very easy to use. Look, even Hertz went bankrupt. And even they have some insider buys more recently than AMC. It's remarkable.
So the other day, this just kind of reminds me, you're saying a bearish indicator of a company spending a lot of money on advertisements with an expensive celebrity. Ryan Cohen tweeted the other day, the only ones more useless than overpriced consultants are those who hire them.
Yeah, I think that was a self-dig.
A what?
Wasn't that a dig? I think he was making fun of themselves.
Really?
GameStop is suing help me out. GameStop is suing someone. One of the
and GameStop hired consultants.
Yeah, like the last administration.
Oh yeah, so he's saying he's like saying that. Yeah. I thought you said meant Ryan Cohen has hired. No, it'd be like that.
No, he's taking a dig at the guys that before him.
Right.
I
mean, he's always been very kind of adversary, saying like this is we can do a lot better in terms of how we run it. But someone just posed a question like, and it.
Sorry, keep going.
It's hard because I think a lot of times consulting companies or consulting firms kind of work with some of these companies secretly. Or a lot of times it's not like public info. Yeah. Eventually it is a lot of times, but sometimes not.
Yeah.
But seeing like what has happened with public companies after the stock return, like after they've hired a consulting firm versus before.
Yeah. The ongoing joke is that they don't actually do anything, right? These consultant firms.
Well, yeah. I mean, and that's what's like, I think what Ryan Cohen's also pointing out with this tweet saying like, that the people who hire them are even more useless, and saying that like these are executives that you're paying hundreds and thousands of dollars a year,
and they're gonna
sometimes in millions, and they're gonna just say, oh, I don't know, we're gonna outsource this to other people that are also getting paid this much money that don't know what to do.
Yeah, I know. It's why are we paying you
to go
pay someone else?
Exactly.
It doesn't make sense. Anyway, AMC and what's the company actually called? The mining, HYMC, what's it called? Highcroft Mining. Those are your big moves of the day here at the outset. GameStop going a little bit with it, up 12%, a little bit more reasonable. Bed Bath up 3.25%. What was the other one? The call KOSS.
KOSS. When there's a million naked.
Up 10% today.
BlackBerry.
Do we need to revisit our list of high short interest stocks?
Clover Health. See how Clover Health is doing.
Like how's Big Five doing? BGFV. Nah, quiet today. How about iRobot? Quiet today. How about Beyond Meat? Well, that had some news, didn't it? Didn't Beyond Meat have some news? I saw it.
I did not see the Beyond Meat news, but
Yeah,
I have not down to 46. This stock was up to what did it get up to?
One something.
200.
200, really?
Yeah, down to $43. Beyond Meat.
Beyond Meat got to $200
a while ago before COVID.
Yeah. Oh wow, Beyond Meat got to 239.
But then during COVID, the crazy markets got back up to like 190 something.
Yeah, wow. Yeah, I think it was a downgrade today from Beyond Meat. I want to say, memory serves. I don't know. Yeah, Jay Rice's comment made me laugh.
What was that?
Because I said bearish indicator is when you have a celebrity in a commercial, and he went or buying the rights to a sports arena like SoFi. Hey, that's fair. That's fair. Did I watch Formula One this weekend? Question from Tiny Pie. So for the second weekend in a row, I was not home during the race. I was out for a good chunk of yesterday. So, and the race was in the middle of the day.
Spencer, that is one race you definitely should have watched.
I know that now, Rohan. Thank you. I saw the highlights. But I watched. What can I say? I watched the highlights. It looked incredible. I'm pissed that I wasn't watching it live, but whatever. I had to go hang out with old people yesterday.
One thing I will say, Spencer,
yeah,
is that whatever they did to change up the regulations this year, it's certainly making for better racing.
Yeah. They changed the rules, right? To make I admit to not having a great grasp of the Formula One racing rules.
They made it so they can't spend as much money. Like each team has a spending cap. That's the biggest change.
Ooh, no, but wasn't there a change to like how they can race too?
Yeah. Some small things, but the biggest thing is like the reason why some teams are way ahead of the pack is they had way more money to spend, right? So this kind of levels things out.
Yeah, happy I'm with you, man. I'm just here for the ride, man. I don't know what I'm watching at the time. I don't know what they're saying. I don't care. It's exciting. All I know is it's fun. I'm just happy to be here.
The sounds are cool.
I'm just happy to be here. Okay. And any Formula One diehard that is pissed off at people like me, go kick rocks. Because this is how your sport grows, is by getting new fans. I've been a fan of Formula One for like a whopping 8 months. So, no, it's been maybe about a year. I don't know. Whatever. Point stands. It was exciting. Formula One stock is not up today, but it was up like 8 days in a row. So
new all-time highs last week, right?
Yeah, new all-time highs last week. It was not up 8 days. What was it up? It was up 1, 2, 3, 4, 5, 6, 7, 9 days in a row. So yeah, down. It's flat today. It's down $0.50, but whatever. Okay. Who in the chat just said? Our next guest has thoughts on consultants. I can't wait to ask him. Wait, who in the chat said to buy cannabis stocks? I think you're a few days late on that one. I'll be honest with you. L. Clay Reed. I am as bullish cannabis as the next guy. I've owned the 4 largest U.S. multi-state operators since before COVID. And yet every single rip in cannabis is a rip to sell. So the vote is today. The vote on the House floor. They're going to probably pass a legalization bill. It's going to go to the Senate where it'll probably get rejected again. But let's just go to a daily here. All right, so this is Canopy. So let's go to well, look, Canopy's down 10% today. What's Tilray? Down 7.5%. How about the ones that I own? Right, Cure Relief down 3%. The opportunity to buy these was all last week and sell it today. You probably shouldn't be buying it. And I say that as someone that likes the industry long term. These stocks can't hold their gains. They just can't.
But I mean, realistically, like right now, the MSOS ETF, which is the Advisor Shares Pure US Cannabis ETF.
Yeah, let's go there.
It's under $20. And if you look at it historically, I mean, it opened around $25, went all the way up to 50 in February 2021, and it's now come crashing down below $20. If you were looking to start a position in the cannabis industry right now, I mean, to me, this wouldn't be a bad way to do it, to just start buying some, maybe averaging into MSOS a little bit. I don't know though. I mean, like we've seen these cannabis stocks like so many times go on runs, and then like you said, just give up all the gains.
I agree with you. Like we're waiting for legalization, right? We're waiting for like the chains to come off this industry and let real capital flood. And like, what's going to happen when these stocks can actually list on the NASDAQ or the NYSE and can actually be held by institutions?
Well, I think one of the problems is right now
that's awesome.
Is you have so many different publicly traded cannabis companies out there that are kind of in the same, there's about like 10 I can just think of right now.
Oh, there's more than that.
Right. But just, supply, whatever they do. A lot of growers out there, we'll say. And once we do get that full legalization, we'll see what we see in other industries. We'll see the biggest companies continue to get bigger. So I don't think necessarily it's also a bad idea to kind of wait and see till after that legalization, see it play out. Will it be Tilray that becomes the national? There will be a Marlboro, a Camel of cannabis, and I want to invest in those. And right now, with so many out there, it's hard to tell which ones will be the cream of the crop.
It's true. That's why I've always put my money on the largest players, right? Curaleaf, Green Thumb, Cresco, Trulieve. These are the four of the largest multi-state operators in the U.S. These are those four make up a decent portion of this ETF right here on the screen. If I was to start over from today, I would certainly consider buying MSOS here for sure. But knowing that I'm probably going to lose money in the short term because that's just the way it is.
Yeah, and again, like we've talked about this on the show before, it's possible to be too early, right? If you want to invest in
way too early,
psychedelic stocks, say right now,
too early.
Right? There are a lot of biotech companies out there that are producing new drugs for mental illnesses using derivatives of psychedelics like magic mushrooms, MDMA, etc. We're still years and years and years away from those drugs being federally or from the FDA approving those drugs. And then not only that happening, but then those drugs hitting the market and actually, big red down on spot.
Yeah, we're just making some new lows here.
Even though I like that space and you do want to get in early, I understand that you can be too early, and when you're too early, you just sit on, what was the stat? If you would have invested in Apple in like 1980, you would have been in the red for like 20 years.
Yeah. I mean, yeah, if only we could go back in time and buy Amazon in 2001 and buy Apple in 1980. But
no, but there's a chart when if you would have bought Apple, you would have if you would have bought Apple in 1980, you probably would have sold it for an 80% loss in 1982. Whenever you're sitting on like that big of a loss, you're gotta get out.
Anyway,
I don't know the exact year. I don't even know if Apple was probably founded around.
I think it IPO'd in like 83, 84.
Okay, so sometime in the 80s. We'll get someone statistician out there help me out.
Anyway, we did just turn down there, made a new low of the day, bounced off that low in the Qs and the SPY. Nothing too crazy. I'm just watching, just in terms of like intraday levels here. Your pre-market low is going to be important. So on the Qs, that's what 357, and on the SPY, that's what 440 something. Not even. We're actually below that now. So
what's oil doing right now? Oil's down.
Last I checked,
I would have guessed oil was up.
Last I checked, it was bouncing. It still is bouncing. Okay, so we are off that low. Oil was getting crushed earlier. It was down like what? The futures were down like 7 or 8%. We're off the low of the day now. So, hey, the inverse correlation continues, right? Market goes up, stocks go up, oil goes down. Oil goes down, stocks go up. Oil goes up, stocks go down. It's inverse correlation. It's the way it is. You know what? Let's bring on our first guest. I see him here backstage, and I know he has thoughts on all of this. Oh, I haven't looked at the stocks actually, Hertz Graham. I'm just looking at USO here. How's like
Chevron's been down all day. I was checking Chevron earlier.
Yeah, you're right. Chevron, XOM, XOP.
Check MRO, Marathon Oil.
Yeah, how's Oxy doing? OXY.
That's Warren's.
Yeah, people are speculating that maybe Warren might come and take this baby out.
Oh, the whole thing?
Yeah, that'd be a big one.
That could be his whale. I mean, market cap 50 billion.
That would be a big one.
He has enough cash to just buy him outright. But I don't think
he does. I don't think he does.
What, have enough cash to buy him outright?
Yeah. But he has a lot of cash. Let's just say that.
Well, I mean, if their market cap is, I'm seeing 55 billion. I thought they had.
You see 55?
I'll check.
Or yeah, he might have like 80. So maybe you're right. Okay. Let's bring on Tom Siomades, the CIO of AE Wealth Management. Let's get his thoughts on all of this and more, and then we're gonna find out if I got his name right. Tom, how did I do on your name?
Pretty good. Spencer,
pretty good?
Yep.
Like 1 to 10, how did I do? A scale of 1 to 10. One is like Siomades, and 10 being like all the way correct.
So 10 all the way correct would be Siomades. So you were pretty close. So
all
I
right,
would say you were
close.
like a 9.6287.
Yes.
That's not bad, Spencer.
That's pretty
That's not
good.
bad.
I'll take it.
Is that the best grade you've gotten?
Probably.
So far, Spencer.
That's why I'm here.
Awesome.
So Tom, we were chatting in the private chat, and you shared some thoughts on, or at least a funny comment when we were talking about consultants. Which there's always a funny quips out there, but everyone's got their opinions on them. But I had never heard that one before, and I thought it was pretty funny.
So that's an old boomer line, right? That goes back to the day. So consultants, they ask to borrow your watch so they could tell you what time it is. So I'm 100% in cahoots with you guys. It's like you hire management, right? And you pay them oodles of money. And ostensibly, you're not just hiring management, right? You're hiring leadership. And if you're in a tense situation with your company or with your country or whatever, you want leadership. You want the people that you entrusted with leadership to make leadership decisions. You just don't want them to just stick it in an envelope and say, well, we'll give it to somebody else who we're paying by the hour, who's just as smart as we are. And we're basically absolving ourselves of the accountability for the decision that we're going to visit upon you, right? So I don't have the backbone to pull you in my office, Aaron, sit you down, look you in the eye and say, man, you're just not cutting it, or we're getting rid of your department or whatever. I'd rather just have someone say, hey, McKinsey and Company just told me that we need to reduce headcount. And unfortunately, as painful as it is, because I know you're a wonderful person, I have to do what they told me because, we paid them.
Meanwhile, you just paid McKinsey enough that would have paid all those employees.
Exactly. And that's the sad part. But I think a lot of that, when you talk about what all is going on just in the world in general, like my worldview is, I think one of the biggest things that we're really lacking is a sense of accountability on the part of people, a sense of ownership, and frankly, business ethics. It's kind of scary how stuff is really just kind of slid. Everyone always just seems to want to point at something else and not stand up and say, hey, listen, enough is enough. We need to address this. I'm in charge. I need to do. And, there's risk with that, right? Because if you make the wrong decisions, what happens? You get blown up. And you know what? Sometimes that has to be the case. Sometimes someone has to die on a sword sometimes, but sometimes the rewards are great too, right? And that's where you get the different people that are running companies or governments or agencies or whatever, can make a difference. But I think there's a severe fear of accountability.
Yeah. I agree. And I think it goes beyond just the business world. You go back in history, right? Harry Truman had the buck stops here. Basically, I'm the leader, whether good or bad, I'll own up to that. And I feel like we don't get that anymore, whether it's our government leaders, business leaders saying, you know what, we screwed up. Here's how we screwed up, whatever. It's always, what's the PR spin that we can put out to make it look like we didn't screw up that bad, instead of just having some of that accountability you're talking about.
Well, the buck's in the mail, right? And it just got printed the other day, so it's all it's coming your way.
Yeah, I mean, I think back to last week when Aaron, you stole my Dr. Pepper. It would have been nice for you to own up to that.
Yeah, but that was, I mean, it was in the fridge. It was fair game, right? That's the PR spin, was that even though it wasn't mine and I stole it, it was no one's name was written on it, and it was in a communal fridge.
Tom, I want to get your thoughts here. Speaking of accountability, accountability from the Fed. You are in the camp of James Bullard. You think we need to just say, all right, screw it. Let's rip the Band-Aid off, raise rates now, front load it, and then deal with the repercussions now.
Yeah. So first of all, kudos to James Bullard, because that's a great stock market finance name, don't you think? Wouldn't that be better? Than,
yeah,
it's great. It's a great name.
James Bearish.
James would be very bad. So you're looking at this and you're thinking to yourself, listen, I think the Fed has never sort of gone off of they've never taken a lead off of first base too much off of the transitory thing. I literally do think that they're going to, or continue to think, a lot of them, that this is just going to go away on its own. And that's been sort of a problem, right? Because it's not going away. It doesn't seem to be abating. And if you go back to what Volcker did to tame inflation, it was pretty painful in the early 80s, right? So to me, my objective would have been to sort of, maybe you could shock the market a little bit without going the full measure. And that would have been going 50 this last time, 75 the next one, and then saying, look, we're going to go 1% at our third meeting. And at that point, you don't say anything at that. You don't telegraph anything. You don't say anything at that point. Say, listen, we just did 50. We're going to do 75 and one after that. You figure it out. And I think that shock and awe approach might have kind of spooked the market, right? And gotten things back where they are. Now we're getting to a point where, well, we did 25. Maybe we'll do 50 next time. And then these dribs and drabs of 25 bips. I mean, when you look at it from a real rate of return standpoint, I mean, people were putting money into the stock market when inflation was 2% and rates were at 0. Where do you think they're going to put money if inflation's at 8% and rates are at 2? You still have that negative real return spread, right? So why would you not be encouraged to keep going back into the stock market? Because that's the only place where you can get any sort of meaningful return. So do I think they should go to 12% on short-term rates? No, I don't think so. But, at some point in time, if you showed a seriousness to leave it alone and say, listen, that ship has sailed. This thing isn't transitory. It's here. We need to fix it, and we need to be serious about fixing it. And to this point, they haven't shown that sort of mettle. So. Yeah.
So just to clarify where we're at right now, this is from the CME's Fed Watch tool. Fed funds futures markets currently pricing in about a 75% chance of a half-point rate hike, of a 50 basis point rate hike at the May 4th meeting. About a 25% chance that we only go a quarter point. And they're giving it a 63% chance that at the June meeting. Right, so only a couple months from now, at the June meeting, we're gonna go up to 1.25 to 1.5 points, which would be a big. That means we've gone from 0 to 1.5 in the span of 3 months. That's a big move.
Yeah, I think that would be a significant move if it happens, first and foremost. But I think Jerome Powell has shown this ability to manage to a third metric, which is, will it upset the stock market? Right. So I thought the Fed had two primary missions, right? It was to seek full employment and manage inflation. Well, we have employment that's below 4%. It's going to pretty much crank down even further. And we got a ton of openings still. So I can't imagine, employment being any fuller than where we are right now. Yeah. And then, but we do have this 8% print, and people are saying it's probably going to get up to 10, in the next reading or so. So if Jay Powell wants to do something serious, do something serious. And that's the challenge that I'm seeing, is I don't see the backbone, from him to say, you know what, we need to step up. And listen, does it matter? In my opinion, I think is if we are better off slapping this thing down as quickly as we can, Maybe it drives the economy into recession. Maybe it doesn't. But is that worse than waiting for months and months and months of this awful consumer sentiment, this awful, just mood that the country's in until we get to recession anyway, right?
Yeah, that's true. Well, first off, some people would probably tell you that inflation's at 10% right now or more. But it's a point about certainty, right? It's a point about Do you rip the Band-Aid off and maybe bring us into a recession today, or do you hem and haw and wait for a few more years and we end up there regardless? Of course, the policies that Volcker enacted in the early 80s were bad at the time, but led to the booming 80s, right? So
right. So and think about it, Spencer. At the same time, is the longer you go with the hemming and hawing and the foot dragging and the sort of qualifiers out there, I mean, that still tells me that they still believe that this thing is going to fix itself, right? It's just kind of like, let's do nothing, and then maybe it'll just dissipate,
So Tom, I'm just curious, is this what you're telling your clients right now, or like in terms of how to position themselves, or what are you telling them?
Yeah, so we're not short term in our outlooks. We're not looking for folks to do a lot of in and out trading type stuff. I mean, we're strategic in their function, and when we talk to we primarily work with advisors who work with end clients. And what the message has been, I think one of the biggest casualties when you do have a lot of market turmoil and volatility is people clam up. They don't talk. I mean, it's when they're stressed, people shut down. So the biggest thing we're telling our advisors right now is get in front of your clients, talk to them, make sure you're revisiting their plan, make sure that they're focused on goals, not on the day-to-day stuff. I know you guys got to do this every day. I got to watch the financial stuff every day. I mean, that's what we do. That doesn't mean your average person needs to be doing that yet. For them, because there isn't 24 hours of news in a daily, in a day, there's only maybe 45 minutes, but we've got to fill content, right? So these people watch this stuff, whether they're watching financial news for entertainment. I mean, I've heard that's a thing too. I don't know why, of all the things we could watch in this day and age of entertainment, why somebody would choose to do that, but they do that. They get stressed out. So the function that we're having, the discussions we're having with our advisors is a function of, are people goals oriented and meeting their goals? Don't look at the everyday ups and downs. And I know you guys have to, you talk about individual stocks, and that's great, but because, people do have interest, but the average person isn't involved in that respect. So you sit down and you say, listen, I know you see the market's down 5 or 10%. Are we still on path to meet our goals? If not, we need to adjust our plan. We have a lot of advisors that, maybe have a war chest, for example, for short periods of volatility, right? And that could be 1 or 2 years. And then they have intermediate goals that are for later on, as folks retire or they move through retirement, and then more aspirational things. So they compartmentalize this stuff. But the biggest thing is I find men are probably worse at this than women, is that, a lot of guys are just like, hey, yeah, I'm a risk taker. I'm all for it. And then they curl up like a baby, right? When we drop 3%, in a week. So, it's important that your risk tolerance matches what you believe it is. And it's not a great time to fix the roof. The analogy goes when it's raining, but I find that a lot of people are running to their advisors at that point in time. So what we're telling our advisors is, listen, you're sort of this healthcare financial professional, right? For these folks, you're more of a consultant. Hey, I had to throw that word in there. Sorry. you're
no, I don't. Hey.
Be an advisor is what I'm trying to tell them, right? I'm just be an advisor, be the cool head in the room, be the person that says, listen, when we clear-eyed and soberly created this plan, okay, you were good with the fact that we might go up and down. So let's revisit that. Let's not freak out because, we've got a war or something else going on and the market is acting more volatile. People forget about that. And I think that's so important.
I agree. Like long-term buy and hold is your friend. Time is your friend. Compounding is your friend. But every so often there comes an event that maybe has to change the equation a little bit. And the Fed going from zero interest rates and just throwing money into the system to the opposite of raising rates and taking money out, that has the potential to change the equation a little bit, no? And change how you think about things?
Yeah, I think certain asset classes are going to perform better in a rising rate or a higher rate environment. But I think one of the good things about the Fed raising rates, finally, people may have an alternative to equities, right? Because you weren't. I mean, when's the last time you guys drove by a bank and saw
the I haven't.
That actually went in, drove by it. You see the big posters, right? In the window, 0.25, 25 basis points for $100,000 for a year. Like, who goes in and takes advantage of that? Nobody.
That's
right?
That's considered good too, I think. That's considered. Well, that's why they're on the window, right?
Right, exactly. That's God knows what the rate is you get when you go inside.
Right.
But my point is now, when you start getting the 10-year closer to 2.5, that might be a real thing for people. Now, granted, in a higher inflationary environment, that's not very good because you're still rocking out at 10%. But the challenge, though, is once we sort of get that thing to start turning downward, if you're going to have higher rates, that gives people an alternative. And maybe you get away from the traditional, sort of spectrum model where it's a 50-50 or 60-40, and you get into more of a core and satellite stuff where you're introducing more alternatives, maybe some gold, maybe all kinds of other things that are maybe not as correlated with the stock market. But I think ultimately, listen, the stock market, I mean, I'm pretty bullish for the most part, although I have been sort of bearish the past few months with respect to, kind of where we are, because I think the market is in a lot of ways disconnected from reality. Once that slap in the head, sort of, once the Will Smith moment happens to the market here, oh, you like that? See,
I did. I was
I'm hit with pop culture. So, anyways, once that moment happens, I think we'll have a fix to all this, and then the market will go back.
But it wasn't just the 20% correction in Nasdaq this past the past month or so, 2 months.
Yeah, but there's some stubborn, like especially the FANGs. There's just some stubborn hangers on that you need to see I think you need to see a more broader correction. Yeah, we've had it.
I mean, Netflix was down 50%, but I hear you. Like Apple, Microsoft have all hung up, but I think it's just because maybe they're a little bit. I think they're considerably more value or at a lower PE and everything than Netflix, which just got crushed with all the other growth tech stocks. But Tom, what percentage of the clientele at AE is like more on the fixed income side, like getting ready for retirement, versus maybe some younger clients that are on the riskier side of the spectrum?
So we probably have more folks that are getting closer to retirement than not. But one of the things that we utilize quite a bit at Advisors Excel is we utilize annuities, right? And so what happens is folks will come to us, and a portion of their allocation will go into an annuity, and that kind of locks in and becomes their fixed income surrogate. So on the other side of the equation, the actual investable assets that they have that are liquid are going to be more aggressively positioned. So it's sort of a barbell approach that we use, where you have the annuity to anchor, the monthly payments, and that's always there when it's needed. And then on the other side, they're able to take a little bit more risk and be a little bit more aggressive to grow that pot.
Yeah. So have you found people have been? I mean, obviously, when COVID first hit and the markets crashed 30% or whatever, I'm sure everyone's calling in saying, "Oh my God, am I going to be okay?" But have you found that over the past few months, I mean, with everything going on between, the little correction we've had in the market, the war and everything, have you guys had a lot of clients calling in being worried, or are people more settled than they were maybe past couple years?
Less time this time around, less so this time around. It was a lot more freaky during the COVID thing, because you remember when COVID started, everyone was trying to peg how this was going to go. So they looked at Ebola, and they looked at the bird flu, and they looked at H1N1 and all that stuff. And it was like, oh yeah, it's going to be, it's only going to be a 12% drop. And then all of a sudden, bam, it's down like 37. And people are like, so that was a little, an artery clogging moment for a lot of investors. But I think a lot of them, because it's been so recent, have lived through that they're a little bit more chill these days. And but the fact of it is when you think about what happened with COVID, you basically took the economy from full speed to nothing, right? That's not going to happen in this case, even though in this particular situation, you do have a lot more on the horizon that's worrisome, right? You got this war, you got an energy crunch, you've got, political stuff, an election year coming up. There's an awful lot of stuff that you would think. That's why I think the market's sort of, in a lot of respects, disconnected, because I think there's just a lot more storm clouds on the horizon than, because we always knew that once, 15 days, to flatten the curve, whatever, even though it turned into 2 years for various reasons. Once we knew that we could turn the market back on. People would just open up their shops. People, people would come back off the sidelines. That's not a certainty in this case. We don't know how this is going to play out because, the energy situation is a big deal. Are we going to start pumping oil again? How are we going to address that? Because we can't just make the leap to EVs and green energy overnight. So there's something has to be done there. And is that going to be one of those painful processes that languishes and we have this, upheaval in businesses? Do we get a recession? Is it a shallow recession? Is it going to be, quick, 3-month affair, whatever?
Yeah, we don't know. There one more before I let you go here, Tom. Question from Morton Matt D in the chat. He wants to know if AE is a fiduciary.
Yes, we are.
There we go.
And I got one final question. I know you guys are out in Topeka, Kansas. I hope you're not rooting for KU to win the national championship.
Oh, here we go.
Well, I'm not originally from Kansas, so
okay.
I try to be polite because I don't know if I'm going to run into a KU person, or a KSU person, or a Wichita State. So I'm sort of like, hey, I just want people to be happy. Seems like a happy place, so I don't want to rock that boat. I don't know. They did well the other day. I mean, they were down and they blew out Miami. So
yeah,
and they're the only remaining 1 seed left, right? So
this is true.
There you go. Well, I'm from Missouri, so I'm a Mizzou fan, but
Okay. Yeah, I'm actually I live right on the border, right? So I live in Leawood, which is right.
Oh yeah.
Yeah, I'm literally walk, half a mile and I'm in Missouri.
Nice,
so I don't want to upset the Tigers either. Good luck.
Fair enough.
Appreciate it, Tom.
Fair enough. Tom Siomades, the CIO of AE Wealth Management. Tom, this has been a lot of fun. Thanks for coming on.
Yeah, we got to get you on again soon, Tom.
I enjoyed this. Thanks a lot.
Thank you, guys. Have a great day. Enjoyed it.
You too.
Take care.
All right. Let's bring on Matt Hammond here. We got some IPOs to discuss, but I swear I had one thing to talk about before Matt, and I don't remember what it was.
Well, you got about 1 minute. Was it Albert Pujols?
No, was it Tesla? Did we talk about Tesla yet?
No, we haven't talked about Tesla.
Talk about Tesla yet?
I'd rather talk about Albert Pujols than Tesla, though.
Tesla's more fun. What was I going to say? Shoot.
Oh, wait. Mitch says put my water bottle away. It's not professional. It's not like a vodka bottle. It's just a water bottle.
Is that expensive? I feel like that looks very expensive.
Yeah, so I forgot my water bottle today.
That looks so expensive. How much? Is that like $7?
No, it was like $4 though.
That's so expensive.
I know, and I was like, all right, I'm gonna
see this.
Yeah, I was like, I'm gonna pay $4 for this because that will make me remember my water bottle tomorrow.
Can I go full screen? Let me go full screen here. Can you guys?
Yeah, the top, I think you can use the top as a cup or something maybe.
This is insane. The engineering on this is impressive.
But do you get the economic? It's gonna make me remember my water bottle.
Yeah. Oh. Wait, look at that. Wait, how do I do this?
I don't know. Oh, there you go.
This is free advertising for them. Man, is this expensive?
It's probably like Coca-Cola or someone.
Yeah. All right. That's enough of that. Holy moly! You got that next door?
Maybe not.
Does it taste good at least?
I mean, it's water.
It's water. Well, I don't know. Some water doesn't. All right. Whatever.
Yeah, you're right. I mean, I don't like. It's better than Dasani. That was the other option in there. It was Dasani.
Why is it better than? That's what I don't understand.
Water.
That's what I don't understand. Why is it better?
I don't know. I just don't like Dasani.
Does it taste weird? That's
Dasani or this?
Dasani.
Dasani tastes weird to me. Some people don't think so. Some people agree.
I haven't had Dasani I haven't drank bottled water in a very long time. All right, whatever. Let's bring on Matt Hammond. Let's talk some IPOs here. As I understand it, we are going to get a couple finally that we've been waiting for this week. Let's see what Matt has to say about it. Matt Hammond, IPO Warriors. Matt, we've been waiting for a few of these IPOs to come. Is this the week we get? Is this the week we get them?
I was last week. We had
last week
in the IPO market. Yeah.
Okay. Excellent. Yes.
They did more or less what we expected, and looking forward to some more action coming our way. As we've talked about before, the market. If the market stays hot, then IPOs will debut. We still don't have any mainstream IPOs coming our way, but we do have some more low float kind of tickers coming along. People have been playing the day 2 runs. We've been talking about how we're not buying the debut right now. We're kind of letting things drop a little bit, accumulating on day 1 and selling any rallies that we get, particularly looking at early on day 2, the open of day 2. But as we saw, sometimes, once a play starts getting recognized and it's a repeatable play, you might not get as extreme a move, and it might come a little bit early. That's what we saw this week, but that is the play that we're looking for. And as that play kind of picks up, we'll start to look for some actual, debut plays.
Matt, do you ever see like an IPO coming out, and maybe you don't necessarily love the business or the industry or the business when you're digging into it, but you think for whatever reason that like, oh, maybe the float's low, and that those have been targeted, that like, oh, this could run. And maybe you do a little investment in it, even though if you don't love the company, or are you only doing it if you love the company?
Yeah, no, definitely. My biggest win ever is still TIRX, which was some Chinese. I don't even really understand what they do, but it was when all those low float IPOs that Boasted and Network One Financial were doing were running. And I just bought it right on the debut.
So it was just because it was
still doesn't get what
just because it was like a low float IPO, and those were being targeted at the time.
Real company. Yeah, the Chinese low float, that stealth IPO setup was pretty much didn't matter. It could be a cleaning company, it could be a law firm company, it could be. Honestly, I don't know what.
It's one of those things that's like
one of the first ones.
It works till it doesn't.
It works until everybody gets in on it early, and that's kind of what we see in and then they get. I mean, even you look at the SPAC plays. Originally, it was whenever the SPACs announced their merger, the things would run like crazy. Then it became this kind of like, once the SPACs vote on the merger and the float gets distorted, then it's going to run. Recently, it's been the de-SPAC, when the ticker changes. But even that has kind of like came into play. Then everybody started buying in before the ticker change, expecting it to run. And then we saw today, last week that was working really well. This week, LLAP today didn't really, it did a little spike in pre-market, but didn't get that run to like 20 or 25 like we saw with last week. So any repeatable play kind of gets hot. The first time it works because, the dynamic hasn't been sort of recognized yet. Then the second one might run, but not as much as the first one, or maybe even more because kind of people pile in late. They go, oh, it's just like that last one. This one's going to be crazy like that one. But they didn't quite see it coming. By the third one, people started front running it. And once you have too many front runners, those are the people that might have been buying it, to spike it on the first 2 plays. Now they're in on it beforehand. There's less buyers. There's, it doesn't dip as much going into it. And we see these a lot with, we've seen them with the reverse splits. We've seen them with the lockup plays, IPOs, SPACs, all these kind of repeatable events. They'll get their like immediate day, their first become the next new thing, and everybody plays them and they're super hot and the wins are incredible. Then the next one is kind of like not as incredible. Then by the third time, it kind of like starts disappearing. The fourth one doesn't work at all. It's sort of a disaster for people. And then, it quiets down for a little while, and then we'll have a market cycle where the market cools off. But then they'll come back again. We've talked about how IPO plays, especially coming out of a cold market, tend to be priced better. People are kind of a little bit more timid. And then the first hot ones will give us, big runs. And we've seen that with these day 2 plays that are starting to get washed out. But yeah, a lot of these IPOs, I'm not buying these to invest in the company most of the time. There's a few that, that I have said, oh, this is going to be big. And the price is fair and the market's hot, so I'll buy it and hold it till it runs. But a lot of these IPO plays are kind of like, well, is this a hot industry? right now is the setup. Is it a low float IPO? Is the underwriter known for kind of restricting the float beyond the actual float? What are some of the insights behind the scenes? Like, is the IPO offering, for example, if it's on Webull, I can see if it gets sold out right away or if it's been on there for 3 weeks with nobody buying it. So there are a lot of things that have nothing to do with the company itself, especially for these low float IPOs. Like, there's a lot of SPACs that people don't quite understand what the companies do or care. But when they de-SPAC, they're looking at numbers like, what is the float? What was the redemption rate? Who's holding it? How big was the pipe? There's these other metrics that come into play. And so much of this market has become almost like stocks are behaving almost more like cryptos, in the sense that people are trading tickers without really knowing a whole lot about the company. They're just sort of running. Why is...
that's always been the case, though. People have always done that, I feel like.
Yeah, I think to some degree, yes, but people understood, like, oh, this is a biotech, that rumor is that they're going to get FDA approval, or this is a gold mine. It's funny that that's come back into that was like the original penny pump and dump stock. Was this is a gold mine? They're going to find gold. Like literally, like a company that mines gold. That was the original pump and dump. Now we're seeing that come back into play with this. What is it?
Highcroft.
Yeah, with HYMC.
Yeah.
But again, it's really, AMC weren't buying it. Why would we be choosing this gold? It's not like all the gold mining companies are pumping right now. So yeah, these things trend. They're the IPO play, the lockup term, LPX, the lockup period expiration, which trading fit girl Ali, you guys have had her on the show before. I think you guys should get her on more regularly. And she's got a very good system for tracking, and it's nothing to do with the companies. It's looking at who has issued warrants, what is the strike price of the warrants, when is the lockup expiration, when the insiders are going to be trying to liquidate their warrant positions, tracking those dates. And her win rate is incredible, and it really has nothing to do with the company. It doesn't, she's got biotech stocks, she's got and they're all recent IPOs and recent secondary offerings and uplistings, which is why there's so much crossover in what we do. But they're great plays, and they don't have anything to do with the companies. They kind of, have everything to do with filings and warrants and floats and share accounts and things like that. So anyway, let's get back to the IPOs here. We've got a few to cover and want to look at what was working last week. The big one last week that worked well was Locify. We talked about how accumulating low float on day one and selling any rips that come is the play. And for me, I'm living by, with pretty tight trading rules for myself right now, partly because with that big market correction we saw over the last few months, my spending power has been clipped a bit, and I've taken some longer term positions on dips that I like to hold a little bit longer. So I am trying to keep what I have in terms of trading power freed up and not get stuck in any bags. But with LCFY, this was priced at 412 IPO, and that came with a warrant. So we expected, whenever we see the warrants in there, we expect the price to debut at roughly whatever the IPO price minus the warrant price, unless there's high demand. We haven't really seen that in any of these low float with warrant IPOs recently. So it was no surprise that this debuted at 334. There was no reason to play this off the initial trade. Let it come down in here. The patient play would have been to wait a little bit longer, but we have seen this dip and initial spike. So I took a little starter position here and thought, okay, well, if it spikes into a halt, I'll sell out of the halt. And if not, I think it was MCAT where we saw that. And that one actually halted down before coming back up. But if it spiked back up into a halt, I was going to take some profits there. Otherwise, I know that I'm going to see lower lows here, and I'll just add some as it drops. So once a drop made, I always find, or I tend to find, that there's at least 2 levels down. So I try to avoid this first one, other than maybe a quick little potential scalp starter position, but not a position that's too big that I can't, double it as as I find further lows to bring my dollar cost average down. I did exactly that. I set some ladders. So a ladder trade is a way to get into or out of a position through a series of trades, especially when I have a lot of other distractions going on in my life. I will probably set something where I think I did 255, 235, and 222. I actually didn't get this one filled. It was it came in just a few cents higher, but I pretty much just built my position and then went to the beach, and I set a few alarms and alerts to see if anything if it started running. I had one trade in my Webull account, a much smaller position, and I play that trade much more conservatively in general, but I took that down to 240 as well. So then I'm pretty much going to stay in this, and I had this one that was down at 222. I kind of expected this to flatten out for the rest of the day and then drop a little bit. That's what we've seen a lot of these low float IPOs do on day one. But I think that because the trade has become more recognized and people are sort of paying attention to it more, people started accumulating here on day one, and it kind of prematurely elevated the price here. I took part of it out of my super conservative account on this halt right here. The rest I said, well, I still think it just broke VWAP. A lot of times we'll see VWAP out of a halt on this, trail back out and find another low. I was completely happy with building more position if it trailed off here. Instead, it kept going up, and finally halted with 8 minutes left in the trading day. And I said, okay, well, a lot can happen over the weekend. I would much rather just be completely out of it and forget about it and have my money back in my pocket and sell out of this halt. So I got out at something like 336 out of this halt. If you held it a little bit longer into here, that's great. The thing I wanted to recognize and kind of point out is that if the debut price was 336 or 334 and you're already above that here, that means a lot of people who want to trade this or looking for that day two run have already taken a position. They've already bought in. And when you see this kind of action in after hours, it's kind of like, well, this isn't really the ideal setup that we're looking for on the day two run. I still think it will get a day two rally, and we can actually go back and check it here and see that, oh yeah, it did have a day two run up to 450. But my position was to get out here with the idea that if it dropped in pre-market, if it dropped on the open, I would get back in it. And that's what I did. I actually, in the newsletter yesterday, I said 260 would be my entry point. It dropped down to 262, and I got impatient and bought in too early. I bought in up here at like 310, 305. So when it came back up, I got actually stopped out for a slight win before the run. I thought maybe the play had already been made. It's okay when I'm being greedy on a double dip, trying to play the same stock twice. I hate to turn that into a loss. So rather than even risk that, I got out. But you can see it did make that spike. It made that day two run. Okay, so the day two rally is still in force, but people are starting to key into it. So you got to keep that in mind for the IPOs coming in this week. If the market stays hot, I think we might see finally something run off the debut, and we can get into those, into those now. But first, I want to go back to this idea because it's been a while, and I just want to remind people that biotechs are different than, biotechs priced at, and any stock price not at the kind of $4 to $6 level. They are different animals than these low float, low priced IPOs. They're kind of like they're kind of, most of them are junky companies that don't really become anything. They kind of flounder around.
They're gambles. They're definitely gambles because you are betting on their ability to develop a drug, and two, their ability to fund the research. It's not a guarantee.
Yeah, and so much of it is there's a difference between different underwriters will represent different companies to their clients, and this kind of plays into having an understanding of what IPOs are to their buyers. Kind of, it matters, because if you understand that IPOs are essentially brokerage companies are pitching these IPO, investments to their brokerage account holders. And if they are bringing their account holders garbage all the time, they're not going to buy the IPOs. But there is this sort of trade-off that goes on where they go, okay, well, if you want this really hot company that we have coming up, this really hot offering, you got to take a piece of this kind of like company that we know isn't that great.
That happens risky, a lot.
But
that was eye-opening. That was eye-opening for me. When I learned that, I had a conversation once with someone who is an underwriter at one of these big banks, and is like, listen, if I'm trying to like build a book, I'm trying to like sell this IPO, and you're my customer. You want the good shit? You got to take some of this crap too. I'm not going to give you the good shit without taking the crap. I was like, oh my God, that's how this works.
Yeah. So with the biotech bus, I try to get my head around, like, I've seen 9 out of 10 biotechs just drop for days and don't come back to the IPO debut price. Some of them are able to debut. This one actually priced at 15 and debuted at 16.85. So if you bought the debut for 50, or if you bought the IPO for 15, you had, plenty of time to get out for a profit if you got the IPO, allocation. For everybody else, if you bought it on the debut, I don't know why you're doing it. Very few of these biotechs like just go up. Some of them do. ANTX did not. This is generally what we see. Some dips and rips, but calling the bottom and the top is very difficult on these. Generally, we see them just kind of fade out. And this one is already down to 15. I think today it was made a little bit of a rally, but nothing substantial. I mean, that's not a stock you want to trade. Very thin volume, a lot of pretty big spread in the, it's not a day trader stock at all anymore. So I pretty much stay away from biotechs on the debut. If they're the $5 specials, those $4 and $5 IPOs with 2 million shares, you can let them ride down on day one, maybe accumulate here and get that pop into day two, just because day traders are on that trade, and pumping, pumpers are playing that. If I see the signs of accumulation on the way down or throughout the day, and then a dip out here, a little lotto play, generally, on a $4 stock that drops down to like 280, it's often not going to fall all the way to 240 right away, although eventually I believe it goes there before it gets the headline. I do like that play, but just because it's a low float IPO doesn't mean it's guaranteed to run. And if it's a $15 price tag and not a $4 or $5 $2 to $4 million float, it's not the same setup as some of the other ones we see, and that's what I wanted to point out here.
Right.
Okay, so now we can jump into what's up this week.
Yeah.
So what I'm really looking for at this point is to see, are we going to get the low float IPOs that be getting a ton of buzz this year amongst day traders, because there's nothing else to trade in the IPO world. So I think that we're kind of due for one or two to run off of the debut. We saw that with HOUR, but we haven't really seen it since then. So let's take a look and see if any of these are poised for that kind of setup. Railvision, this is RVSN. This was rescheduled from last week. It is interesting. It's not just a biotech. It's, we did talk about this last week, so I'll just kind of recap it. They have imaging technology and data processing for railway, for train safety, with the potential to develop autonomous trains. Someone pointed out the conductor does not drive the train; that's the engineer.
Yeah, somebody was very angry at you for saying that last week.
But that's great. That's fine. It comes back
the
to
engineer,
your idea,
Matt.
How much do you know about these companies?
It's the engineer, Matt. Get it right.
You could give me the ticker and this line right here, that it's Aegeus Capital and they don't make any money. and I would still probably trade this the same way. The fact that an engineer drives a train or a conductor, it's like I love that movie Mallrats, where he's looking at the
somebody was fired up about that last week.
Yeah.
I meant to
it's not a sailboat, it's a schooner. Okay, I'm sorry. So they are pre-revenue. They don't have a working product like completed yet. They do have some investment from a German brake manufacturing company that specials, or one of their products is the braking systems for trains. It's the kind of thing where you almost expect it to drop out until they're allowed to make an announcement, or until they're allowed to sell their insider shares, and that they already have some kind of headline. I believe that a lot of these plays IPO with kind of an ace up their sleeve in terms of a headline that they know they're going to be able to drop after the quiet period expiration or after the lockup period expiration in order to pump the shares. And the reason I say that is coming back to, and maybe we should recap this, companies after they IPO are not really supposed to release any sort of press releases or news until 40 days after the IPO. There is some sort of question as to whether this applies to microcap or emerging growth companies, but it is a general rule, and we've seen it a lot of times that after the quiet period, a headline gets dropped, and that spikes the price back up to the IPO price or above. The other kind of more dependable and in some ways more logical expiration date is the lockup period expiration, which is when the insiders are allowed to sell their shares. So this will debut with, say, 1.97 million shares, but there's a whole bunch of other shares that the insiders own. And those are the early investors. Those are the executives of the companies, the employees. And it's kind of painful for them. They see these stocks debut at, say, $5 and then bleed out to $2 or $1.80 over the first couple of weeks. And, after 90 days, oftentimes, especially with these smaller companies, after 90 days, sometimes there's a lockup period there, expiration there. Oftentimes it's 180 days. But we do like to watch those dates as they approach, and possibly be accumulating shares on knifes down or drops down, so that when those and the numbers that we're looking at the IPO price, we're looking at the warrant, the warrant execution price. So this, for example, is 1.97 million shares. It's actually 1.79 million units. It's a unit plus a share. So there's all these warrants out there that are exercisable, usually at the IPO date, the IPO price plus 25% or something. So if that price is, say, $5.25, then we're going to, and the stock has dropped down to $1.80 or $1.60 or something. That's a great time to buy, because that the insiders are trying to pump it back up to that $5.25 so that they can get, execute their warrants, make a little profit on those, sell their shares that they that are locked up, and those are things that we look at down the road. As for day one, as long as this is, unless I see a strong pre-debut indication price, so we can see what price the shares are going to open at before they debut. You can see these on Webull. You can see these usually on...
Not always to 100% accuracy, obviously, but you can see where they're indicated at for sure.
Yeah, it's been pretty accurate. It does shift around a little bit, and when they actually pull the trigger, I've had someone who was who handled one of the IPOs. I think it was, I forget which one. Maybe I shouldn't even say it. But he explained to me how that process goes, is that the book runner, who's not necessarily the underwriter, but is usually attached to the IPO, will be on the phone with the NASDAQ floor the morning that the day that it goes live. And as you can see with the Benzinga Pro, I like this tool a lot. When you guys do have it for the tickers, it'll say RVSN scheduled to open for bid at 10:10 a.m. EST. Can open for trading at 10:20. So they have to balance shares for at least 10 minutes. After that, the book runner's on the phone with the NASDAQ floor, and the NASDAQ floor is telling them, okay, right now we've got, we got a price at 425. Do you want to go live? No, not yet. Okay, now it's at 4:35. Do you want to go live yet? No. Okay, just tell us. And they just calling out the numbers, and then eventually they go, okay, yeah, take it here. And Nasdaq goes, are you sure? And they go, yes. And then they, I guess, press a button, and that's where it starts trading. And if I'm trying to get in on the debut trade, I'm looking for, is there a buy side or sell side imbalance, which we can see in the Webull apps, either the desktop app or the phone app, usually, not always. If I see a buy side imbalance and it's above the IPO price, that can be a strong indicator that we've got a lot of retail interest and it could rally off the debut. If we see a sell side indicator, there's no reason to buy that. If that sell side indicator persists for most of the imbalancing period, the pre-debut imbalance is when they're pairing all the buyers and sellers. If we see a sell side imbalance, I'm usually going to back off and wait for a dip or not play it at all. Recently, we've seen nothing but sell side imbalances below the IPO price. So we just back off, wait for it to dip, accumulate through day one. If we get any kind of rally, consider selling at least part of your position. Otherwise, hold in for day two. The next slide. Okay. Genius Group. This one's pretty interesting all of a sudden. We talked about this last week. It was 7.27 million shares, and the underwriter was Think Equity. So just to recap what the company is, a Singapore-based ed tech company with online and in-person services. They got a lot of corporate clients, including Deloitte, J&J, Vodafone, Google, IBM, Heineken, Lenovo, DHL, HP. I mean, they're not a nobody company. This is a company that has, real clients. They have almost 2 million students, almost 10,000 partners. Revenue is up in the 6 months ending June 30th, but that we've pointed out is kind of a weird period to be comparing to. You're comparing, recovery versus the first half of COVID. Gross profits were down during that period, which is a little weird that they lost, unless maybe they're operating a loss and they just weren't operating at all. I don't know quite how to explain. That's usually we don't see gross profit negative in IPO companies. Their baseline financials are bad. They're all negative. But what's interesting in here is that Think Equity basically couldn't sell enough shares, apparently.
Oh my gosh.
And Bosted stepped in and said, we can sell these. And it's a Singapore company, and Bosted is kind of the underwriter that made those Chinese, Asian.
This all sounds bullish. This all sounds bullish to me.
Yeah, so all of a sudden this got more interesting. I can't remember ever seeing, in the last 2 years where I've really been doing in-depth research on these, I don't remember ever seeing an underwriter just get completely swapped out. I've seen underwriters get tagged on, but haven't seen them just get completely replaced. It's interesting. So now it went from no sign of a stealth IPO to, who is Bosted bringing in to buy these, these shares that Think Equity couldn't get to buy these shares, and
they know people.
Yeah. So the thing you have to be careful on any of these Bosted plays, and I, very infamously ripped myself pretty badly, losing sight of the fact that if you're playing a $5 IPO and it debuts at $27, for example, even if there's a buy side imbalance and it goes up, you can still get pretty badly burned. So it's not unusual to see the stealth IPO price at 5, debut at 11, and then rip up to 30. But if it prices at 5, debuts like over, say, 20, you definitely don't want to touch it, and don't go so hard on this that you can't afford to lose half of what you've played with, because these are very risky plays. And whereas TIRX was exactly the same kind of setup, and it went from it was priced at 5, debuted at 16, halted at 17, and then I sold out of that halt at 50. So it was a pretty crazy win. But it can go the other way too. So keep that in mind. This one is very interesting all of a sudden. I'm sure it will get talked about on Twitter. given that we haven't really had a stealth IPO that opened at a playable entry for a while. This one, it feels like we're kind of due for it. So I will be watching this one closely. And I think I'll be live streaming this on Thursday. If we get this and RVCN, RVSN on Thursday, then I'll live stream these.
Nice.
The next one is one that looks very interesting as well. This is Expion 360, and it was just added to the calendar yesterday. It showed up on Webull for allocation request. I just saw it yesterday, put it in order, and see that it's already sold out. So I believe that's usually a very bullish sign for it to sell out right away like that. This is a company that creates lithium ion phosphate batteries for RVs and boats. I did some, searches on their product to see what the reviews were like, and people say these are, incredibly good batteries that can run for like 3 days. Don't know anything about RVs or boating, but that sounds pretty. The reviews are very positive.
I don't know anything about this company either, but it sounds like if they're making RV batteries, that they could make car batteries too.
And they're planning to expand into at least industrial applications and home energy storage. So it kind of feels like everything that even, revolves around battery stuff, comes back to people is triggering that, EV, it could be an EV play. And that's, we all know that's pretty hot. Revenue is up 187% in 2021 versus 2020. I don't know if that's just because they were kind of a relatively new company that picked a great time to be, everybody was buying RVs last year and spending time on boats instead, kind of local staycation type things rather than flying around because of COVID, or if it's, it seems like right place, right time, but gross profit was up 443%. And, when you have 30% gross margin on it's not software, this is, a tangible good. That seems interesting to me. At least it's a good enough story. I'm not buying these for long-term investment. I'm buying these to catch, hopefully, everybody thinks it's a great idea and wants to buy in on day one. So this one to me looks like it could be a pretty interesting runner off the debut.
Right.
With Bosted, I'm always worried that with Bosted, with this one, I'm worried that it'll debut at like 35 or some crazy number like we saw with this is the one we had before that was and this is a play that you really with Akonda, AKAN. So AKAN debuted at something like 31 and pretty much just fell off from there, closed at around, I forget, like 10 or something, but then for the next day it spiked up to 19. So there are plays to be made on these. You just have to, this one looks a little bit more like it could do a traditional debut and run, which we haven't had for a really long time. So I'd really like to see that kind of setup. The underwriter is Paulson Investment Company. I could not find any records of any IPOs they've done, at least for the last few years. I don't know if it's their first IPO ever, but they don't have any kind of track record, which could be good, could be bad. We just don't really know what to expect from them. If they are trying to they have done a lot of secondary and direct placement offers. So if they're trying to get into IPOs and do more IPOs, then you'd think they want to start off on the right foot, or maybe they just don't give a care at all, and they're going to screw everybody and walk away from it. But interesting to see a new underwriter come onto the scene. And then we have two uplistings. I don't know much about them. They're both biotechs. Sam Biosciences. These guys own a license for Siomades. I might have spelled that wrong. Siomades. I think there's an L in there. 153, which is some clinical stage cancer treatment. Blah blah blah. I don't know. Shares and warrants. The warrants are what make this interesting. We have seen uplistings kind of crash out for day one, and then rally in day two off of a day one dump. The underwriters think equity. They kind of mixed bag. Bring a lot. They were the ones who actually backed out of the GNS IPO. So I just like to watch these because if we see any heavy dip on a low float stock, you'll see these trading groups accumulate them and then pump them on day 2. When there's a low float, they can be very volatile to the upside. This one just showed up today, so I didn't do a whole bunch of research on it, but it's some kind of UVC germicidal irradiation technology.
I don't know what that is.
It's some kind of anti-COVID angle, so it's a COVID play.
Okay.
And
cool.
They currently trade at something like $1, just over $1. They're going to do a reverse split and then price at 968, which means the float is going to get choked and the price will probably drop off at 968.
Great. That's what they gotta do. That's what they gotta do to get on the exchange, is they reverse split their way onto the minimum price. So
yeah, the compliance is $1. So if they debuted at $1, they'd probably very quickly fall into non-compliance. So they do this to give themselves room to get cut in half before. So again, not something. I will not buy the the uplisting IPO.
Matt, we're up against the clock here. Anything else for us?
Go for it.
All right, we got to go. Up against. Do we have anything else?
Safe. It's not financial advice. Blah blah blah.
Blah blah blah. Have a good one, Matt.
Bye, guys.
All right, guys. We got to talk about Tesla real quick before we bring on our next guest here. The news today is that the board has approved, and now it goes to a shareholder vote, the idea of increasing the number of authorized shares in order for the company to do another stock split. I got to admit, I don't necessarily know if I understand why one is necessary. Why do they need to increase the number of shares to split the stock again? But we know how the market loves stock splits. So Tesla trading up 7.33% today on that news. And if you look at the daily chart, this thing, I mean, we've talked about this, Aaron. How many times have we looked back and said, oh, should have bought Tesla on the dip? Every time, it seems like. Every time. This time is no different. So Tesla now is back to where it was trading in the second week of the year. It's back to where it's trading on January 13th. After getting down to as low as $700, we're now almost at $1,100.
I got to
a month later.
I got to admit, I did something that a lot of people have lost money doing.
Yeah, you bought puts.
I bought puts today on Tesla.
Today?
Well, not like.
You bought them like today.
Like I'm up 20% on them. I bought them like at the top today.
Oh shoot!
I bought them while Tesla was up like 8.5%. They were up. They were up a lot, but the Tesla's come back like $10 or so. I'm actually a Tesla shareholder. I think we're due for a little pullback here. Tesla's up like 20% this past month. Look at that.
know, it's a lot. It's fast. I agree. Do you understand the logic though? Why do they need to increase the number of shares to do a split? Does anyone know? If they're already going to do a split, they're already going to increase the shares anyway, right?
Yeah.
They
I don't know why
they want to do it more.
I don't know why you would need to add more shares now just to make those.
I know
shares
that's,
10 shares.
I don't get it. I don't know.
But yeah.
Anyway, so I want to talk about Tesla, and
also I know we've talked about this on the show before, that the market seems to very much overlook lawsuits, but I've been seeing more and more about this like racial discrimination lawsuit from Tesla.
Really?
And and it can be like very, very, very costly for Tesla if like some of the accusations end up being true. I don't know. Look more into it.
Dimitri says they would increase they would increase the number of shares to have an equal split, to have a nice round number. Maybe.
Also, did you see last week Kathy Wood sold a bunch of Tesla on Friday?
No, I have to admit I've not been doing a great job of tracking Kathy's trades recently. So I know she sold. I know she bought some SE, some Steel Limited, on Friday, and the stock is down 2.5% today. It was down more, but
yeah, she actually bought some different EV.
Really?
companies out. Yeah.
All right, that's interesting. Let's go back to the scanner again. We're looking for gainers and losers from the open.
She bought Boyd, Warren Buffett's.
Wait, Boyd is Buffett?
BYD.
Yeah.
Not Boyd Gaming.
Yeah, no, I know.
BYDD. Yeah, we've talked about that.
Yeah, okay.
Warren Buffett's back. That's his EV, the Chinese. Right. She bought NIO and some Boyd and sold Tesla.
All right, it's 101. Let's bring on Jake Wujastyk from TrendSpider.
What up, Jake? How you doing?
Hey guys, just sorry I'm a little late there. Just dealing with the same issue I had last time. So let's see if this works. Yeah, I'm having trouble sharing my screen again. This is seems to be a StreamYard issue because I didn't have this issue before.
Interesting. What do you know what we did last week? Did you just hop out and hop back in?
Well, I put my chart tab on the same one as the StreamYard browser, so I have two tabs open. And that's what worked last week, but now it is not working. So let me see if maybe this window works.
Okay, if not, if you have some names you want to talk about, I can pull up the charts on through Benzinga Pro.
You guys should be able to see it now.
Oh, beautiful.
Little on-air shenanigans there. So yeah, we got it up. Can you guys see my screen?
Yes, sir.
All right, awesome. Sorry about that. Yeah, no, kind of a dull day today. We've kind of just been slowly grinding up in the markets, and not really shocking after such a big move to the upside a couple weeks ago. And now we're just kind of slowly grinding up, at least on the broad markets. And what's interesting is you had a really big move up in Bitcoin over the last day or so, as well as crypto in general. And the markets really don't have that risk on, risk off feel that they usually do when Bitcoin does move. So, we're still hitting these lower highs from the January highs. So technically, we do need to keep that in mind. I think what a lot of people are looking at right now are simply just the moving averages, which is what a lot of people use just to gauge trend in the market. So you can see here that we got through the 200-day. It's still increasing, meaning that the 200-day moving average, is still increasing with the trend being, longer term still up. But you can see this orange line, which is the 50, starting to decrease less. You're starting to maybe see a little bit of a curl here, and then your 20-day moving average is curled up. So you do have some of these moving averages that a lot of people look at just for trend starting to maybe change a little bit. Price above the 200 is what a lot of people are looking at. But, that hasn't really been a huge price above the 200 hasn't been a huge deal since January, right? So we broke above it and then, broke below it, touched it here, broke below it. So it hasn't necessarily been like, an end all be all, oh my gosh, we're above the 200 on SPY, we're all saved. The price is just kind of trading around that moving average, almost like a line of best fit at this point. So I would be more like looking at just the general direction of these moving averages. 20 is moving up, so your short-term trend is starting to move up. And that was after really those big days in mid-March. Now we're getting to the end of the end of the month in March. So kind of what I would be looking at is really the monthly charts at this point. So, some of the things that I would focus on, and this is something I made a few weeks ago, maybe even a month ago, but you can see pretty much since 2010, we've been trading in this kind of broadening channel here, and we're kind of trading right in the middle of it. Now, anytime that we have tested the upper part of this channel, in the past, we have pulled back to test the lower part of the channel. That's what this black circle is for. But notice it took months. It took a while. We've had times where we tested it, pulled back, tried to retest it, and pulled back. So right now, not a bad looking monthly candle, but keep in mind this is 1 month. We have a rising interest rate environment. We've got some just weird stuff going on in the world. You've got not only rising rates, but you have rising prices. So, if they raise rates too quickly, that's going to, really put a damper on the economy on top of these prices. I mean, how many times have you looked at airline tickets in the last week or two and you're like, ooh, maybe that trip can wait. And
right.
I definitely have looked at tickets. I'm like, there's no way I'm paying $800 for a 3-hour flight. And so I think a lot of people are probably looking at that, and that may be an issue in the next month or two as people really start to pull back on some of these things that were cheap a month and a half ago. So something to consider. But overall, the monthly candle closes on Thursday. Decent monthly candle forming. And what I would say is kind of looking at the seasonality. If we want to look back pretty much since 2009, which is the end of the financial crisis, that's kind of my anchor point for seasonality. That's when we've really started just this huge move up. April has a 92% win rate. So April is actually the strongest month of the year. And you don't really hear a lot of people talking about April being a really strong time of the year. But the numbers show that 92% of the time, April closes higher than March's monthly close from the start of our bottoming process during the financial crisis. So, going into a very strong time of the year, that's something to consider. Seasonality definitely shouldn't be looked at as, this definitely is going to happen because it has a high percent chance or high win rate in the past. But it's something to keep in mind. You've got a decent monthly candle. You've got big seasonality, high win rates going into not only April but May as well. People say sell in May, go away, but you've got a 69% win rate over the last 13 years. That's much better than 50-50. So that's something to definitely consider on the longer term side of things. But from a shorter term side of things, at least today, people probably aren't day trading, SPY or the Qs. They're trading some of these individual names that have moved.
Yeah, and it's I think it's fun. It's always like cool to see what months have done historically in the past, but like I don't know how much I'll ever let that determine my trading. I mean, if you would have stayed out of trading May of 2020 right after the COVID bottom, that was like one of the best months historically ever. Even though typically, right, you hit that point in the summer where people are more on vacation, not trading as much, maybe volume's not as high. So definitely important to keep in mind those trends.
Yeah, and I mean, if you're looking at the month-by-month trend, it doesn't, April doesn't really matter if you're a day trader or even maybe like a couple-day swing trader. This is more for like position trading or positioning into April if you want to swing something through April. But if you did want to look at even the hour of the day or the day of the week, you can use that. So like, let's say that you want to look back since the start of 2022 for SPY and see is there a particular day of the week that trades really well. You can see Wednesday is definitely the top performer, at least since the start of this year, with a 58% win rate. And you could go down to the hour of the day and see, is there a particular hour of the day that's more bullish or bearish versus other ones? So
wow.
That's something you can do. You can do that for different types of trading. It's not just the month of the year seasonality. So that's something I like to look at. Just
yeah, no, that's great info to have.
But yeah, so as I mentioned, SPY not doing much. The Qs, they're up, but kind of similar candle. You did break the highs from Friday. You have a higher low here. The main thing that I'd be focusing on, if you look at kind of the volume profile from the December high before we really started to move down, you do have the price kind of stepping up these volume nodes. So all of these volume nodes represent how much volume has occurred since this point here, the December high. So if I move this line, it's just measuring from that point that it's anchored from. So yeah, you've got this area of volume kind of supporting price here, and the price is above it now. So if this were to continue up, I would definitely be looking at maybe a test of this previous support and then resistance in early February. That's right around 369, 370 or so. So the Q is not looking horrible. And then if you look at the monthly chart, since next time we do this, we will be in April by then. Same thing. You got a pretty strong candle here. One thing to note, you do have lower highs and lower lows, at least as of today on the monthly chart for March, but still a relatively strong hammer. And you had pretty much a hammer, give or take maybe a few dollars. Some may not call this a hammer because the body you may want it a little bigger, but you've got two wicks here that really show when the price dropped, you did have buyers step in or just simply supply drying up during these pullbacks. So not a bad look going into April. And if you look at the seasonality for April since 2009, this is on monthly. So pretty much since that same anchor point, April has a 77% win rate. So still a pretty strong time of the year. And that's the thing. Like you said, you don't want to just go and trade off of, oh, well, April has a 77% win rate. I'm going to buy some calls expiring end of April. It's more or less looking at, okay, we've got a decent monthly candle. We're going into a strong April. Maybe I look at some names that are showing strength that may do well during this, strength in the markets. So it's definitely just a tool in the toolbox to use. It's not, go all in on April calls because April has a high win rate. That's definitely not how to use this. And then IWM, same thing, 71% win rate. So, relatively, February, we actually closed green for IWM, and you can see that, that was a pretty strong time of the year. So you did have price doing its thing and being in line with those seasonal stats. But the main thing that I'm watching here on IWM, and I mean, I've had this chart for 6 months, just this previous resistance zone back from 2000, acting as potential support here over the last 2 months. We've got a higher low, not a higher high yet on the monthly candle, but kind of a double doji setting up on this previous resistance area, now acting as potential support. So all in all, IWM doesn't look too bad here. If you look on the daily chart, let's see, volume by, there we go. Same thing that I kind of used on the other names. You've got the January high here. You've got this zone that has acted as resistance, pretty much shown by these red circles multiple times over the last 2.5 months. And then finally, we flipped above that, and this area has now acted as support. You can even see we bounced at this area today, right above this $200 area. So until the price breaks back down through this area, this VWAP right around 202, as long as we hold this blue area, we're still in this SR flip, meaning the previous resistance is now acting as support. But you can see it has been just chopping around now for literally the last week. So that's something to keep in mind. If you are trading options on IWM, you're probably getting chopped up a little bit because it has not really moved out of this range over the last 7 or 8 days. And then, going to our last couple ones, Bitcoin and Ethereum, that I always look at just as a top-down approach. This is probably going to go down as one of the better case studies to look at using the volume by price. And it works so well with crypto. Crypto is just so purely supply and demand driven, much more than the equities market. You can see, yesterday, we were pretty much right at this area. This is another VWAP zone. So your orange line is your actual VWAP from this November reversal point. But you'll see here that literally this area has acted as resistance like 10 times. So, 1, 2, 3, 4, 5, 6, 7. I mean, some of these tests have been multiple wicks. But what I did was I added percentage bands below that original VWAP to capture some of the price action that has interacted with these bands, but not the actual VWAP. So notice here back in March 1st, we bounced right off of this band. So I just did a trial and error and said, okay, what percent off the VWAP is this band? It was around negative 1.5%. So you can see this band act as resistance here. Over the weekend, we had trouble closing above this band. And then once we did, finally, that's when we blew through this gap. And this is a volume gap, an area where you don't have a lot of liquidity. So each one of these volume bars represents how much volume has occurred since the November high. And if you're following my red circle, you have this kind of pocket of volume where there's not a lot of liquidity that has happened. And what happened? Well, the price went pretty much straight from 44.5 up to 47.5. And the reason why we've stopped here is because we have this next round of volume that we're back at. So imagine that you originally bought Bitcoin over here in December of 2021, and then you had to deal with a drawdown into January of around 30%. And then finally the price gets back to where you're back to break even. You may take some off the table. And that's exactly what's happening. We're hitting this break-even supply zone, and we're running into some of those participants who are back to break even and maybe taking some off the table, or maybe even taking their full position off the table now that they're back to break even. So not shocking to see price having some trouble getting through this volume node, but keep in mind that price can chew through these areas. The market just has to digest some of that original supply. Then you can easily move above this area. Tesla is a good example of this over the last couple.
Yeah, Tesla's been making a crazy move. It's actually been breaking out over the past 15 minutes or so since we've been talking. Tesla's moved up another 1.5%.
Wow. Yeah. So I mean, look at Tesla. This is a great example. This break-even supply zone was here last week. And same thing, right? You had an area where you didn't have a lot of volume. The price literally went straight through it, right to this break-even supply zone above. It took about 3 days to digest some of that supply in the market. Then we had decent news today. We got above this volume area, what we're going to call break-even supply. And now you don't have a lot of market participants up here. So the price can move very quickly because you don't have a lot of people getting back to break even. You know, most of these shares now are holding at a profit. So, you know, some people, you know, we may hit an area here, and all of a sudden you've got some people from this area here starting to take profit, and you could actually see a little shelf form here maybe over the next however long it takes. So this volume profile does morph every day, or even every 30 minutes. So if you have let's say that you had a bunch of people start selling here, just a ton, you may see a little volume shelf form here. So these things do form. It's not just like, oh, well, there's no volume above, this thing can just keep going up. It does evolve over time. But I did want to bring this up simply because we have the exact same setup that we had on Bitcoin, where we moved up to this next area, break-even supply, took a few days to digest that supply. Now we gapped pretty much over it, and we're moving up pretty quick. So the volume by price tool on TrendSpider is something I use literally every day. And it's not something that's incredibly unique. What's unique about it, because a lot of platforms have volume by price market profiles, it's nothing out of the ordinary. What makes TrendSpider unique in using this tool is being able to quickly just move this vertical line over and picking where you want your start point to be. I picked the January high because this is the last time we tried to break this previous high before we hit these lows over the next 2 months. So it's kind of your reversal points that you want to anchor this from. And the January high was definitely the most relevant reversal point that we've had so far in 2022. And then you can see since this point where volume has occurred. And if we move this over, let's say to the February 24th low, you'll see that the volume does change as we move this to different points.
I mean, at some point, this has got to pull back, right? Or no? Is Tesla just going to keep going, get to...
You never know. I mean, if you look at the monthly chart looked horrible like a week or two ago, and now all of a sudden you're really forming a pretty strong monthly candle. So, that's something with Tesla. It can look really good or really bad and change within a day or two. So you just kind of have to take any chart you're looking at day by day and respect price action and what it's telling you. But at least for this one, we still have a higher low from last month, definitely a higher high. And if we close near the high of the month, it definitely could be a strong April. And I think April does have a pretty strong win rate as well. Yeah. I mean, if you look back since the IPO, Tesla has a 64% win rate, which is the third highest win rate of any month of the year since this IPO. Now, if you want to look back maybe since 2016, so the reason I would say 2016 is this is when we kind of put in this bottom here before really moving up over the next 5 years. If you want to anchor it from 2016, April has an 83% win rate. So April is a very strong month, regardless if you're looking at it since the IPO or since we bottomed back here in February of 2016. So we are entering another strong time of the year for Tesla, and that may be a bull catalyst going into next month.
Yeah, I mean, it's same old story with Tesla. I mean, again, there's news today. You have the a new stock split potentially coming. Tesla joining Google and Amazon both have recently announced stock splits coming soon. Do you want to take a look at Google's, or what do you have pulled up right now? Sorry.
That was Tesla. Google. Yeah, I mean, all of these monthly setups look pretty good. And the thing is, yes, we could have another big move down in the next 3 days, but that would be kind of pushing it. If you look at these longer term areas, Google is right in this almost like a a bull flag type of situation where you've got the consolidation over the last several months, but you do have this flag forming here on the monthly, at least, where here's your flagpole pretty much straight up since COVID, consolidation, decent monthly candle here, and definitely could be one to watch for a breakout into the coming months. May and April actually do really well. So 67% win rate for April since 2016, 83% win rate for May. If you wanted to pull this back to that 2009, oh, this is Google. I was thinking it's Microsoft. So yeah, I guess since Google went to Alphabet or whatever, the seasonality goes back to 2014, but still, not the weakest time of the year for Google. But yeah, a lot of these broad market, bigger blue chip names are definitely setting up for possibly continuation into next month. I don't know, what was the split on Google?
I believe it's 20-1, so it's going to become a $150 stock from 3,000.
Wow, nice. Yeah, that definitely shouldn't hurt. But yeah, I mean, on the weekly, you've got kind of a rough start to the week, but it's literally half the days gone by. So this is something that is interesting on the daily. A lot of people look at descending triangles and always put a bearish bias on them, but descending triangles are actually really, really bullish if you can get the breakout. So notice here, when we did break to the upside instead of breaking down, we've had a really strong move from around 2,600 all the way up to around 2,850, give or take $10 or so, over the last week and a half, 2 weeks. So descending triangles do have more of a bias towards the bear side, but if they do break to the upside, they are very powerful breakouts. And you can see that here. There's Baba was another good example of that, like a couple months ago, where you had this descending triangle and then you just broke out from like 110 to 135 before had the huge move down to like 75 or 80 a few weeks ago. But yeah, all in all, I don't think the splits are going to hurt any of these names. You've got Amazon.
No, they typically only help.
Yeah, I mean, you got a lower price point where people can buy in. Amazon is looking really strong. I mean, this November high VWAP has acted as really strong resistance, like a lot over the last couple months, several months. Then we finally broke above it. We continue to hit higher highs. So, Amazon's looking good. All your FANG names are looking good. I'm not sure what Microsoft is looking like right now.
What about Netflix? Netflix has maybe been the one that is definitely lagging the most out of all the FANG stocks out there.
Yeah, no, for sure. Yeah, I think streaming in general is just having trouble. People are not sitting on their couch all day and stuck in their house watching stuff anymore, because they can go out and live their life again. One thing I'd point out here, at least on the daily chart, is you do have kind of this flag, same thing. You got, here's your flagpole up, and then it's not going to be perfect, but you can draw a general kind of flag capturing a lot of this price action here. And that's the thing, your flags or any of your setups don't have to be perfect. It's got to capture a majority of the price action. And if it can do that, then, for me at least, it remains a type of setup. So here, a flag, generally you want it to break out after, 4 or 5 days. This has been going on a little longer than that, but still you're consolidating after this big move. We'll see what happens there, but you do have a pretty big gap above from that earnings back in January.
All righty, let's see if there are any tickers flying in from the chat. Michael's asking, do we think oil will be higher in May? Michael, it's really, oil, we could look at the chart, but it's just impossible to know with what's going on with the war and everything.
Yeah, I had somebody reach out to me or comment on one of my posts and said, what do you think Tesla's going to close at by the end of the day? I'm like, I don't know. I'm not a fortune teller. I don't have a crystal ball that I'm rubbing on. And that, nobody, if you ask anybody what the price close is what the price is going to be tomorrow or the day after, they're full of it. Nobody knows what is going to happen. Smart technicians and people who trade are just letting price action decide, right? It's not the point of trading or even, just analyzing the markets isn't to try to predict what's going to happen tomorrow at tomorrow's close. It's what are the levels that are going to be triggers for a move up or move down. That's kind of the way to do it. If PayPal, for example, PayPal here is one that I kind of talked about over the weekend, and it has a bull flag, but for me personally, there's a trigger, right? If you look at the volume by price and where prices volumes occurred since the January high, you're pretty much stuck at this volume shelf. So right now, I don't know if it's going to go up or down, but I know if it breaks down through this flag support and this VWAP, then it's probably going to continue lower through this volume gap, and that target below would be 106, 107. If it can close above this volume shelf right around, let's say 117.50, then I would expect it to test the 125, 126 area above. But I'm not trying to predict PayPal's close tomorrow is 118.60. And if somebody's trying to tell you that they can predict that, then I would run personally. It's all about just understanding levels at which prices need to break above or below in order for a thesis to be to have some logic behind it. So I just personally get some of these questions sometimes. I'm like, I have no idea what price is going to close at next week, given today. If you ask me what PayPal is going to close at today, I have no idea. I have zero idea. But yeah, USO, one thing I'd mention is USO is kind of like a decaying asset, right? If you go look at what oil is at, and then you go look at USO, oil's way up there in the 100s, and this thing is down from 2008. 2008, oil hit 150 a barrel. Now oil, I don't know what oil is today, but it's definitely not down 91% from the 2008 highs. So USO is pretty much the only thing I can look at on TrendSpider for a proxy. So I don't have the ability to look at CL
the crude futures or anything. Yeah. I don't know. I think it's like you said, no one can predict if we were going to tell you, do we think oil is going to be higher or lower than it is right now in May? We would have to know that outcome or what's going to develop in the Russia-Ukraine conflict. We just, like you said, Jake, don't have a crystal ball. So,
yeah.
Let me see some other.
Here's a case study on even USO, right? We're having trouble getting through this huge volume node here because this is where You know, a lot of people maybe bought USO right before COVID and rode it up, had the diamond hands all the way to here, but now that they're back to break even, that's where some of your supply comes in, and it's not a coincidence that we're having trouble getting through this area simply because you've got a lot of shares that are now back to break even, and on top of that, you know, it's just a simple previous horizontal level. So a lot of the time, if prices are trading within a range for a long time, you're naturally going to see a lot more volume that's occurred at that area, and that's kind of what you're seeing here. Any other tickers? I know we only have I guess we're out of time, but
yeah, I think we are out of time. Looks like Bernice wanted to check out Square. Didn't we? We just did PayPal though, right? So
yeah, I mean they pretty much
similar
moved together. Square has had a lot of trouble getting through this October high VWAP. So just simply looking at essentially what's the dollar cost average from this high before we really started this new low trend, this new trend that had lower lows. Yeah, you can see this VWAP zone has really acted as resistance multiple times. You know, you could argue maybe there's a little bit of a bull flag there, but you know, PayPal and Square moved together, so not shocking to see that.
Yep. All right, Jake. Thank you, as always, Jake from TrendSpider. You can go get 25% off using the code BZ25.
Yes, sir.
All right, let me go ahead and drop that link in the chat. Again, Jake Wujastyk, always a pleasure to have you on, man. Have a great rest of your week.
Hey, you too. See ya.
Peace. All right, guys, Jake Wujastyk from TrendSpider. Going to go ahead and drop that link one more time in the chat. Again, 25% off when you use the code BZ25. So go check that out. TrendSpider, great as always. Spence.
Oh, did you hear the news that just broke while you were on with Jake about Detroit?
About Detroit getting the NFL draft?
Yeah.
I did.
Detroit is going to be hosting the NFL draft.
Shouldn't it be in like Vegas or something?
It is in Vegas this year.
I know. Shouldn't it be in Vegas like
Detroit gets the NFL draft in 2024. It's going to be right outside, right here. That's where they're going to host it.
In one campus marsh area.
Right outside our office.
No way. Right here?
Right here.
Like
right,
where we did the ice rink thing?
Right. Yes, right there. How cool is that?
What are we going to put on the sign?
I don't know. We have 2 years to think of something witty.
All right.
You're one of your favorite stocks is making a big move here.
QuantumScape.
Yep. Oh, you knew that. Damn.
I did. I keep up with things.
I thought for sure he wouldn't have known what I was talking about.
Damn it. Those things.
All right. QuantumScape. Report that they're working with Porsche.
Hey, man, it was always a matter of if.
Not when.
Not when. Was QuantumScape going to start getting some of these deals? It looks like we still don't know when, but it looks like the if may be being answered.
Yeah, I'm trying to follow.
Did it hit like the Bloomberg Termi?
The Termi?
Yeah. Did it say like QuantumScape?
No, it's not. It's not from the Termi.
Oh,
it's
man.
not from the Termi.
Where is it from? Now
it's from.
Now you're getting my hopes up.
It's from Electric.
Oh, Black Mage. I can't read. The NFL draft will be hosted right outside our windows.
Right outside our windows, just in a little over 2 years. So hold your breath.
2014.
2014. Electric, which is a pretty reliable source in the EV world.
Okay.
Says that new details of future Porsche EVs have emerged, including plans for an electric 911. And they've been working with QuantumScape to integrate solid-state batteries into future Porsche EVs. This just hit the wire. It went live at 1:18 Eastern Time. Let's go to the QuantumScape chart. When did we start breaking out here? Oh, 1:18. What are the odds? All right. We have ourselves a mover. We have a runner, everyone. Strap in.
I'm still down like 40% from when I got in.
I know. And speaking of runners, who in the chat was trading Newegg earlier?
I know Luke was talking about it last week, but I know Happy Muhammad was also trading.
Yeah, shout out to whoever bought Newegg at like $79 a year ago. Still though, whatever. It's up 41% today. It's making a move, but you know, short-term moves. Always moves to be sold eventually. What's new in the chat? Anything? Did I miss anything?
Guys, what's new in the chat? Let's tell Spencer something he didn't know.
Yeah, exactly right, Happy. Like the odds are you weren't watching you weren't on Electric when that news broke. So but yeah, Black Mage. All right, you know what? He had a plan and he stuck with his plan. Ain't no such thing as a bad trade when you stuck to your plan. That's what I say. Ain't no such thing. Here's the scanner tool. Again, you can see Newegg on there, AMC, GameStop, QuantumScape among the big gainers of the day. On the losers front, not a lot that I recognize here. I always look for tickers that I recognize, and I don't recognize any of these guys. There's a couple that I know, but...
Sorry, I'm just reading this press release about the draft.
The Porsche? Oh, the draft?
Yeah.
Yeah, we get in the draft. It's going to be fun in 2 years. All right, let's do this. Since we have a few minutes here, we have a few housekeeping items, things we want to tell you about. But before we do that, let's do our crypto update of the day. I bet you I know what color the heat map is. I bet you I know.
Did you guess correctly?
Oh, I guessed green in my head. But obviously, if you're watching crypto today, you know the crypto's having a really, really good day. I don't know why. I don't think there needs to be a why. Actually, I have a theory.
Okay.
I came up with this theory sort of in the middle of pre-market prep with Dennis with the assist on that. But this rally today in crypto is a direct reaction to what happened last week in stocks, the last 2 weeks in stocks.
I thought you were going to say a direct reaction to the Will Smith, Chris Rock incident.
Bitcoin is up because Chris Rock did not hit back.
I did see a take out there from...
you did?
Yeah. From our man, Ross Gerber.
That what? Bitcoin is up because Will Smith slapping Chris Rock signifies the end of
I don't know.
The dollar?
I got to be honest. You know how sometimes...
people say things?
People do say things. They're prone to do that. But sometimes, like sarcasm or facetiousness, the tone will not be conveyed well.
Doesn't translate in text.
Yeah. So I'm not sure if that's something... something that happened here. Let me try to find did he delete it? He might have deleted it.
Anyway, crypto. So this is the thought, right? We've had 2 amazing weeks in stocks, and crypto is further down or further up, whatever direction you want to go. It's further along the risk profile, right? You got to go further along your risk spectrum to get right to find Bitcoin. It's a higher risk asset than stocks, and risk is on. Everybody wants risk. Everybody wants tech. Everybody wants to chase and buy the dip. Nothing embodies that more than crypto. That's the take.
All right, here it is.
What's this take?
From Gerber. Bitcoin surging on the Will Smith incident. Now at 47. I legit, I don't know if this is a joke or not. I hope it
is. Is that a joke?
I don't know. I don't know. I certainly hope so.
That's wonderful.
Yeah, I mean, there will be a lot of takes out there.
Yo, if I worked for an alopecia drug company or anybody that worked, I would be marketing the crap out of my product today, right?
Aaron Thomas, this is you in the chat? Or is this a spammer?
No, that's Aaron Thomas. He's trying to mess with our...
the bot?
We're experimenting with a chat bot.
Yeah, we have sentient robots
we're not sure. We can't get it to work the way we want. Anyway,
We're really trying to get like more into AI, sentient robots over here.
Yeah.
And just kind of see what happens.
Yeah.
We don't think anything bad can really come.
Speaking of robots, you know what's a good movie about that? iRobot. Starring Will Smith.
Starring Will Smith.
Great movie.
Way to tie it back in.
He slaps a robot in that movie. Anyway, crypto is up today. That's the bottom line. If you want some free Bitcoin, go to Voyager. Go create an account. Use the code ZING when you sign up. Fund your account with $100. Make a trade, and they will send you $50 in Bitcoin just for using that code ZING. ZING. Check it out. Yeah, I'm firmly in the camp that it was real.
I'm a truther. I'm a Will Smith, Chris Rock truther. I know.
Wait, is that what I am?
No, you're a believer.
I'm a believer. Oh, the truther is saying it was all fake.
Yeah. Like I think like the moon landing truther is.
Got it. Okay.
Or like
so you're a truther. You're in the camp that it was scripted.
Fake. Yep.
I'm in the camp that it was
not buying it. I think they're already saying that.
Who's they?
Just people. People are saying that the Oscars had better viewership last night than like the previous like 10 years. Like it had been on the decline for the previous like 10 years. Then last night viewership went up.
I think 14 was an all-time high. 2014.
Okay. What was? Oh, I think that's when the selfie was taken.
Yeah. But my question to you is, if that's why they scripted it, why didn't they do it earlier in the?
See, I don't know. I was already in bed. I was already asleep.
Yeah, I wasn't watching. I was not watching last night. Full disclosure.
I think who's that poor
dude? There was a second slapper in the grassy knoll. Whoa! Do we have footage of this?
I don't know. I do think.
Do we have footage of the second slapper?
What was the tape called? The
You're close.
I don't know.
Zapruder.
Yeah.
There was a second slapper? Dude, I did not hear about this.
There was a second spitter? I think it's more likely that the slap was staged than the moon landing.
That's certainly a take. Yeah, I'm with you on that one.
Okay.
Anyway,
that's what I'm saying, Patrick Star. If someone's that upset, you go up and you freaking sock somebody. You don't just like slap them across the face and walk away. If I was that upset at someone that it would like require me to like get out of my seat and go physically confront them, I'm not just gonna try to like slap them not even hard enough to.
I saw footage of Oscar from a few years ago where he was ragging on Will and Jada, where Chris Rock was.
Oh, from a couple of years ago?
Yeah.
So he's had it out for them for a while?
I think I had it out for them is a bit of a strong characterization of this, but
he's been making jokes about Will and Jada for a while.
Yeah.
Okay.
Yeah.
I mean, he's making it. Look, Chris Rock, he's learning that if
anyone watched the whole thing, the whole incident, like after the fact, after he got slapped, right? You can tell that Chris Rock so wanted to like make another joke there, but he didn't.
Yeah. Let's remind ourselves.
He's so you could see the gears turning in his head. Like, what do I say? And then he just decided to play as cool as he could have.
Yeah. Let's keep in mind these guys are professional actors.
It's true. They're professional.
At the end of the day.
All right. What else do I want to plug? Okay. So we did the update. Hey, we have a really big guest. Actually, two big guests on the channel tomorrow. First big guest is going to be tomorrow morning. Finally, on Pre-Market Prep, we're going to have Stephanie Link on the show from CNBC, and we've been trying to get her on the show for years, so that's very exciting. But more exciting than that, though, is the roadmap. Tomorrow on the roadmap, you know what they have on the show?
No clue.
They have cool cats and kittens. No, just cool cats. Cool Cats NFTs, one of the largest NFT projects. I think, what is it? It's definitely top 10.
Hell yeah.
On the show tomorrow. Tomorrow, 2:15. It'll be like after the show ends. It'll be at 2:15. And I have it on good authority that they'll be doing an Ethereum giveaway on the show.
Ooh.
That's tomorrow's show.
Full ETH? Nah.
TBD.
TBD.
Cool Cats and an Ethereum giveaway on the show tomorrow. So that'll be on the roadmap. That'll be, you know what? I'll just drop the link in the chat now so y'all can like save it, bookmark it, set a reminder, set an alarm, whatever it is you got to do. Where is it? Here's the link to tomorrow's show. And there it is in the chat. All right. That's the first thing I want to do. Second thing I want to do is promote our upcoming events a little bit because we have 2 of them. We have an event in 3 weeks. Is it 3 weeks or 2 weeks?
Oh my God, it's coming up. The Benzinga Cannabis Capital Conference.
It's wait a minute. It's
April 20th.
Yeah, it's 3 weeks. 3 weeks and change. April 19th, 20th, and 21st down at the Fontainebleau, Miami Beach. The Benzinga Psychedelics and Cannabis Capital Conference. Let's put the link up on the screen for the people to learn more. Aaron Thomas just says to send him a link.
Hey, huh? Oh, the bot. The bot's pretty active, guys. And be nice to the bot while
he's new.
He or she is learning.
He's new.
How to be a sentient.
Wait, is the bot? Does the bot have a pronoun?
I don't know. I'm just saying he or she right now.
Nightbot. All right. There's the link, Aaron Thomas. The Benzinga Cannabis Capital Conference. Use the code SHOWS30. SHOWS30 to get 30% off your ticket to the conference. It is, and this is an undisputable fact, the biggest cannabis conference we've ever had at Benzinga. Mike Tyson will be there. Will Smith and Chris Rock will both be. No, they won't be there, but that would be crazy if they were.
That would be crazy.
The CEO of Curaleaf, the chairman of Curaleaf will be there. People from Canopy Growth and Cresco Labs and Tilray will all be there. And Aurora, their C-suite CEOs will all be there. I mentioned Mike Tyson. I have heard whispers of another famous celebrity, but I it's not confirmed yet, so I can't say who it is. Al Harrington, former basketball star, will be there. Oh, okay. Aaron is saying if you put !event in the chat right now, you will get the link, but I didn't get the link, Aaron. Oh my God, that worked.
Hey, Spencer.
What's up, Ron?
Do you know if anyone's getting slapped at this event?
Well, I did say Mike Tyson was going to be there, so.
Whoa, I would volunteer to get slapped.
Let's put the odds of a slap at greater than 0%. How about that?
I'll take it.
Greater than 0%. We can do a raffle.
And Rohan, if Mike Tyson doesn't want to slap you, I will.
That's every day.
Not quite the appeal there, but
no. But I'm just saying as like a backup. I know it's not the appeal. I think he's first choice. I'm just saying if that falls through,
got it.
I'm happy to step in.
Gosh.
Maybe that can be our 150K celebration. We'll let Mike Tyson or as a backup AB slap me.
I wouldn't want to do it. I'm just saying I'd do it for the content. Like if we needed something,
right.
I'm willing to step up and be a team player.
Okay. So, all right, here's a question. Who do we think is most likely person to want to take the slap? From Mike Tyson?
No, I'm not doing that.
I know. So both Jason and myself have.
Michael Murray would do it.
I don't know about that.
Michael Murray has a nice strong jawline. He would do it, I think. Or we have this guy, Adam Partridge, who is former high school basketball star and college football player. He's a big guy. He would do it. I bet you he would do it.
We'll see.
I bet you Adam would take it. That's my guess.
It'd be a good story to have.
Jason, I think Jason could get peer pressured into doing it. I'm not gonna lie.
You don't have to pressure me that much, honestly. I just know the value of that content. So I will, volunteer my face for that.
Yeah. Okay, so that's the first event. The second event is the one that's a little bit more relevant to this show and this audience, is the FinTwit conference, May 13th and 14th at the Aria Hotel and Resort in Vegas. Send you the link. Find your own links, Aaron Thomas.
Ask your bot for the link.
Why am I sending you the link? The link is in the description of this video. How about that?
How about that?
The link is in the description of this video. Use the code, whatever code is in the description, because I put it there. Here. Use the code BZYouTube20. Well, that code sucks, he says. All right, make a new code then. That link doesn't work that I just sent you? Oh, crap. All right, hold on. Benzinga. All right, I'm getting you your link right now. It's gonna be amazing. It's hosted by Benzinga and Lupton Capital. Gonna be awesome. Have I mentioned that I'll be there? Because I fully intend. Although we haven't announced who's going yet. Aaron Thomas seems to think he's going. Here, I'll update the link in the chat or in the description, but it should be in the chat now.
Wait, what are you? Okay.
Use the code BZYouTube20 for 20% off your ticket.
I just don't want the bot to get overwhelmed.
I think the bot can handle it.
All right. I know it's new here, so.
Wait. Video. Oh, they're all typing in commands now. That's funny. There we go. 2 events. Cannabis in April. FinTwit in May. And that's what we have. Before we go as well, I wanted to once again plug Benzinga's Stock Market Madness bracket. We are into the quarterfinals. If you don't know what I'm talking about, check out this link that I'm just putting in the chat. There it is. And on the screen. There it is. And I'm going to share my screen. We are into the quarterfinals. You want to vote for who you think the crowd is going to vote for. That's what this is. We are into the quarters. Tesla versus Ford, Apple versus Amazon, Pfizer versus Moderna, and is that Celsius?
CEI.
Okay,
no, Cambridge Energy.
Thank you. Cambridge Energy versus AMD. This is your Elite 8. Vote for the stock you think the crowd will vote for, and you could even win some Bitcoin, because it says it right there on the top of the screen. $1,000 worth of Bitcoin. As a reminder, the Benzinga Stock Market Madness contest is sponsored by Public. Public.com is the investing platform where you can build a modern day portfolio your way. Invest in stocks, ETFs, and crypto all in one place. Start investing today and be sure to cast your vote for Stock Market Madness. Public also has been super upfront about the fact that they don't do payment for order flow. So if you are against payment for order flow, you would probably like Public. Just putting it out there. Anyway. Okay, let's take that off the screen.
Is the QS news?
What?
All right. I mean, I just saw that we were selling off a little bit. I just wanted to make sure that the news still stands. Porsche and QuantumScape.
Wait, Mitch is mad about Dutch Brothers. Dutch Brothers, were they in the bracket at all? I don't think they were.
They should have been in the meme.
Yeah, I don't think they were in the bracket.
Should have been in the meme bracket.
Yep. Yeah, they definitely. There's an argument for that, no doubt. Yeah, I don't see it. Anyway, that's what we got.
All right, guys. Like Spencer said, we do have Moon or Bust coming up.
I didn't say that. You did.
No. Yeah, you were talking about roadmap tomorrow.
Yep.
But we have Moon or Bust coming up today.
We
2
do.
p.m.
We do. Moon or bust. And also, guys, by the way, I may have said this on Friday. We're doing a lot more spaces. If you're on Twitter, check us out at Benzinga. We're basically doing spaces every single day now. So
It's a lot of spaces.
shout out to Justin and Alyssa and Ryan and Logan and Brian and everyone who's involved with the spaces here for crushing it because they did a really good job. So crypto spaces every day and stock market spaces too. That as well. Okay. Did we plug everything we needed to plug? I think we did. Check out Benzinga Pro as always, guys. It's the heartbeat of this company. Pro.benzinga.com. Get a discount by using the link to Benzinga Pro. That is where? In the description of this video. Yes, you got it right. Thank you, Aaron. It'll get you a 25% off automatically. It's the link that's right at the top there. And you know what? I'll even put it on the screen for you. There it is. That's the link. It's in the description. Get 25% off your Benzinga Pro subscription. I know you want to do it because it's got Squawk, it's got scanners, it's got movers, it's got
quite literally everything you need.
Everything you need. Options activity, news, data, calendars, SEC filings, press releases. I mean, yeah. I don't know what else you could want on it. Yeah, it's got a whole community of people hanging out in the chat, talking trading ideas all day. I don't know why you wouldn't want it, honestly. Why is SoFi? Look, Patrick, don't hate the player. I don't know. Aaron and I did not make this bracket.
SoFi,
So, yeah.
SoFi, not doing great, Spence.
I'm aware of this.
Still below $10, hanging around 903 right now.
I'm aware of this fact. It's okay because I have Formula One.
That's true.
I'm going to retire early because my minuscule. I own like a half a share of Formula One. No, it's a little more than that, but not that much.
You better hope a lot of big races. You better hope there's some new hot drivers that come in.
That's why I watch.
That's why everyone.
It's because the drivers are beautiful.
I know. That's why they should not allow them to wear helmets.
No helmets.
No helmets.
No helmets.
All right, guys. Stick around for Moon or Bust. Let me make sure that redirect is set, and we'll be back tomorrow, 11:30 a.m. Eastern. Wednesday, we will be.
Oh wait, actually, I had something to say about Benzinga Live, but it's going to start. It's going to start late on a Wednesday.
Okay.
It's going to start late on Wednesday, but normal time tomorrow. So that's a wrap. We're done. Everyone, please do us a favor and smash that like button. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. And
or gambling advice.
Or gambling advice. I did not gamble at all on the Sweet 16 or Elite 8.
I did.
I would definitely gamble on the Final Four.
I got screwed. Freaking Houston did not hit a single 3-point. They actually, I shouldn't say that because they went 1 for 20. So I guess they did hit a single 3-pointer, but they went 1 for 20 from deep. They couldn't get it done.
SMH. St. Peter's, we still love you. There's always next year. Guys, smash the like. We'll see you tomorrow.